I don't wanna talk. How you try and press the kid and really you was soft. All you know is capping, homie, you don't know the law. Pedal to the metal, you ain't catching me in park. I just hit the stop. I don't wanna speak. Talking all that good, so I just hit you with the plays. Running up the score like Tyreek, I'm going deep. Watch me how I'm saucing, I be spreading it with ease. You gon' see the peace. You gon' see the flex when you hear these writtens. Trust me, you know the difference. I got a long ways to climb before you see a slippage. I see the process and the journey I'm supposed to be, but perplexed, cause I don't really see nobody close to me. Hopefully this ain't wasted, and I know it ain't. You gotta take the time for seasoning to marinate. You need the patience under pressure just to detonate. I'm trying to blow up and these heathens need to get it straight. Gifted with a vision and precision, I'm just trying to make it high key. Might be breaking free like I was Zion in some Nikes. Tucked at the crib, bro, you know just where to find me. Making beats and spitting crack verses pretty likely. Yeah, socks with the burst, boy, I ain't changed a bit. Normal guy till I die, you know what it is. You probably thought I'd give up now that I got some kids, but really now I got these arrows aiming at your ribs. I don't wanna talk. How you try and press the kid and really you was soft. All you know is capping, homie, you don't know the law. Pedal to the metal, you ain't catching me in park. I just hit the stop. I don't wanna speak. Talking all that good, so I just hit you with the plays. Running up the score like Tyreek, I'm going deep. Watch me how I'm saucing, I be spreading it with ease. You gon' see the peas. Hey, please be on the notice, these my motives. Bought my chicken and it's rotis. You parsimonious, you take it all cause you a locust. My focus is to grow this mission. A visionary, get a dictionary. We here off the rip and we ain't sharing, we just caring. Let me speak it to the manager. We damage her, no you ain't messing with an amateur. I'm ramming, the competition ain't standing up. They fanning from left to right cause now they branded us. Now who that is? Mike Jones, they ain't want me now, they all on me. Got counterfeits trying to play me, I guess they thinking I'm Sony. These big head dummies showing up and out of their character. Homie, you need a price cause without it the squad ain't hearing you. Top of that, we ain't fearing yet. We swinging for the fences with the sting of a left hook that connects with Sonny Liston. I'm dismissing any and all of the disrespect. Nonetheless, it ain't a threat, I'm just letting y'all know who's next. I don't wanna talk. How you try and press the kid and really you was soft. All you know is capping, homie, you don't know the law. Pedal to the metal, you ain't catching me in park. I just hit the start. I don't wanna speak. Talking all that good, so I just hit you with the plays. Running up the score like Tyreek, I'm going deep. Watch me how I'm saucing, I be spreading it with ease. You gon' see the peas, you gon' see the... Woo!
Yeah, I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat. Yo, grew my hair and took the grill out. Think it's time to put it back in. Trying to get into that big house, turn the crib into the mansion. Needed something with that big bounce. You know I had to hit Jackson. Aaron Rodgers with the quick routes. I'm with the gang, we packing. We on the field at Lambo. Might peel in a Lambo. Running drills in my camo. They know what the M stand for. Still got fam in Hawaii, yeah. Couple fans in the lobby, yeah. Couple grand in my pocket, yeah. Couple grams of wasabi, yeah. Eye it up, no glasses. Light it up, no matches. Wife it up, no ratchets. Might turn my wife to an actress. And we gon' make a movie, no Kim K. Give a fuck about what your friends say. I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat.
I'm just sticking to the code, I keep it so G. She asked me what I smoke, I'm smoking OG. I don't fool with too many, only catch me 4 deep. Gotta stay away from snakes, swear these people so creep. I've been grinding for a minute, many labels so sleep. These rappers drop a song, be hot for about a week. I put Gucci on my toes, I keep some cold feet. I ain't paying for no hoes, you niggas know me. I'm about to body the beat. I keep me a hottie with me. She wanna for a fee. Give me that for free. Keep me some money on me. Smoking the gas key. You with me, sheesh. But need cheap Keith.
I got money on my phone and money on me. I got all these hoes, but still lonely. They been blowing on that strong, but still so weak. I've been higher than a drone, but but still low-key. We been sitting on the floor, they in the nosebleeds. Lately I've been in control, they can't control me. Yeah, they about to get exposed for being so cheap. I've been sticking to the code and I ain't gon' cheat.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah. At the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah. Maxed out, put the pedal to the floor, yeah. On the road, here we go, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah. At the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah. Maxed out, put the pedal to the floor, yeah. On the road, here we go, here we go. Here we go. On the road, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream every single weekday right here, or FOMC live stream, every FOMC meeting right here at 1:49 p.m. Eastern Standard Time. Welcome in, Mafia. Jerome Powell about to hit the stage. We got a huge day for crypto today, guys. We are expecting a quarter point cut here, which obviously, as we talked about yesterday, is very likely priced into the market here. So are we going to see the news event? Are we going to get the big dump? Are we going to get more of a cut than people expect? Are we going to get the rip to the upside? Absolutely critical day for crypto today, guys. So we're going to cover it live with you. We'll watch our boy Powell speak. Guys, that meme of Powell getting on stage is one of my favorite things in the world. Hype him up, guys. That's somebody's grandpa. Hype him up. But yeah, guys, we got a lot to talk about today, and it's going to be fun. We're going to cover and see what Powell sounds like. Obviously, the quarter point is probably priced in here, but we're going to watch him talk and see if we can kind of spot if he has a dovish or hawkish tone, because I think that is really what is going to pick the direction in the market today and moving forward. Because if this is just kind of like a, hey, we're just going to cut here and we're gonna assess it as the data comes in, then that is probably not going to be a great time, right? But if he starts to hint towards this being the start of a bigger cutting cycle, cycle, this is obviously going to be a very, very bullish thing for crypto. And we have all the things on the charts here, guys. We got the altcoin market cap tapping on all-time highs. We have the RTY above its retracement levels, looking for a potential breakout. We got the dominance coming down. Is your altcoin going to pump finally? Well, I do think this is going to have a big, big impact on what we can expect next on crypto, guys. So shout out to everybody in the chat. Thank you for being here. I appreciate every single one of you guys. I even got some music maybe we'll play here while we watch this price action kind of print. Yes, sir, correction. Yeah, we do actually have some bearish signs on the chart, so we'll talk about that. Short stream. Shout out to Hugos. Welcome in. Yes, guys, it's only going to be a 5-minute stream. Shout out to Hugos, meaning probably 3 hours. Shout out to Jesse and Art in the chat. He is our like police, guys. Go ahead and smash that like button if you have not already. Shout out to Vexy, says Frankie. What is going on, Vexy? Welcome in. We got Carrie Stressel in the chat. Said howdy from the line from the Hotline Pepper product. Shout out to Carrie Stressel. I gotta grab some more of that hot sauce. That hot sauce was fire. Shout out to Carrie. Welcome in. We got Johnny December in the chat. We got Dutchy. We got Crypto Owl. We got Captain Kirk, Mafia Mama in the chat, guys. We got the mods here. Show them some love in the chat if you haven't not already. And let's go ahead and dive in and let the madness begin. The volatility has already started, guys. So let's go ahead and jump on into the charts. Let's get into it. Maybe we'll watch that Powell meme one more time. Let's see. Shout out to Vexy, says, let us know if we need to buy or sell, okay? All right, shout out to Vexy. But let's see. Cut the rates, Frankie. I don't have my scissors on the desk. Maybe I'll go get the. Maybe I'll have to go get the scissors. But yeah, as we look at the charts here, guys, a little update on Bitcoin's current situation here. Let me go ahead and hide some of these key levels. Obviously, guys, we do have the major level of resistance sitting above, starting at about $117,500 up to about $118,500. We covered this level yesterday, and its importance because if we did, no guarantee that we push up here, but if we did push into this level, guys, this golden pocket is going to be the first major level of resistance in confluence with our POC and a daily naked point of control that we have sitting there. So, if we do get volatility to the upside, we start pushing into this resistance. This is the big level to look at. If we're able to flip above that, you guys watched the market update yesterday, you will know that we are going to be looking up towards about 120 to 120.8K. And then this is going to be the line in the sand. Getting above that point of control is going to make me feel a little bit better about all-time highs coming in, but we have to get above that 786, guys, because we do have to be careful. If we are going to potentially push up into this Fibonacci retracement, this could be an area to put in a lower high before a macro, or put in a macro lower high for a potential lower low. Now, this isn't necessarily my base case right this second, but we do have to keep in mind, guys, this is a major macro Fibonacci retracement, and daily money flow attempting to continue to creep to the upside as we looked at yesterday, but we got another fresh red daily dot here, or a fresh daily red dot here. And on FOMC, guys, be careful out there, protect yourselves if you're trading this madness. Make sure you use a stop loss. If we're going to see the TA not play out, the FOMC meeting might be able to step on the TA a little bit. But we got the red dot on the daily. We also, as we push into this daily horizontal level of resistance, we are putting in, and if you guys watched the live stream a couple days ago, we were looking at the 10-hour time frame, very specifically looking for the potential creation of this bear div on the 10-hour time frame, which would indicate a break of structure to the upside, which we did get, and we did get that bearish divergence to print. I would have loved this. I would 100% be short if we put that 10-hour bearish divergence into our major key level, but we front ran it, and we did wind up getting the rejection here. I even showed this level on the update last night. The daily at about 116,878. We do have the 10-hour bearish divergence. We also have these propping up on time frames like the 12-hour. You can see higher highs, lower highs, fresh red dot printing, 16-hour bearish divergence printing as well, and then you have the daily red dot. Now, on a day that wasn't FOMC, on a regular normal day, I would be looking at this saying, well, hey guys, this is probably looking more bearish than bullish, right? I would expect potential lower highs and lower lows to come in. Maybe we see that. Maybe FOMC steps on it. Again, just be aware, guys, the volatility we see today, we're going to probably see a lot of big wicks. The TA might get stepped on a bit here, but on a normal day, I would definitely be looking at this as a high time frame bearish divergence and the 12-hour red dot printing on top of the bearish divergence. We also have the 45-minute money flow crossing over into the red, indicating a potential continuation to the downside. But remember, this is in the context of a normal trading day, which today is not. So be careful out there if you're trading, right? I would still say the probabilities of that playing out are probably higher, but on an unpredictable day like FOMC, you got to be a little bit careful there. So I typically don't trade on FOMC days. If I see a nice setup pop up on the chart here, maybe we'll take a trade live. But for the most part, I kind of like to chill out. I am still holding my long position here from $107,000. I have locked in some more profit here. I now have 2K locked in, 1,600 unrealized. So I did lock in some more profit there. Stop loss not even set, but I'll probably put that at break even at some point. Maybe you guys will see me like, Frankie, you should have set the stop loss. It dumped down and you're now in the red. But yeah, we got a lot of room here to get back down to my entry here. So I'm just going to hold this. We'll see what happens. I wanted to lock in some more profit here in case we get a mega dump. And I could always re-add to the position or take a new long if I see another opportunity. So yeah, let the madness ensue. Is that a word? Ensue? Let the madness ensue? I think that is a word. But yeah, what are you guys thinking? You think we're getting are we going to get surprised with a with a bigger cut? Are we going to get the dump? Are we going to get the pump? Let me know what you guys think. Let's see. I'm going to get your throws a dab on us and announce his cuts and that he is Satoshi. Shout out to Hugo's. Jerome Powell is Satoshi? That would be hilarious. If we take the downside liquidity and print an SFP wick, go long, long, long. Shout out to New Earth Guardian. I do have some places where I will be interested in potential scalp positions here, guys, but the major levels still remain the same as we've looked at on the previous live streams and the market update last night, just to have you guys a little bit prepared here. We do, when we take a look at the liquidation heat maps, we have a little bit of liquidity leading up into that 117.5 to 118K zone. You guys can see that liquidity sitting right up here. And then just below us, between about 114 down to about $112,000, we have another area of liquidity, which also just lines up with our next major levels, right? There's that liquidity up here leading into the golden pocket POC daily naked point of control. And then we have the $112,000 or $113,000 to $112,000 zone on our golden pocket 786 anchored VWAP value area high confluence. So these are still the most interesting levels, in my opinion, for bigger trades. But we do have this daily and weekly NPOC sitting at about $114,250. It's going to be another level I will be interested in local scalps, but we'll see what happens here. These are still the bigger levels where the liquidity is sitting, so maybe we come up and we flush out some of this liquidity before getting the bigger drop. And then again, if we flip that POC, I would see that as much more bullish, pushing into 120,000. And then if we do wind up losing this range, right, we could look down towards that weekly and daily MPOC. But again, this is not as interesting of a level. It is nice confluence, weekly and daily MPOCs, pretty strong levels, but we also do have some local Fibonacci's in there as well. If I pull it from the breakout of the range here up to the high, you can see golden pocket 786 sitting there as well. I'm more interested in the idea of the liquidity sitting down there. This was not the liquidity that we just looked at, but if you look at a lower time frame, we do have liquidity leading into this $114,000 zone as well. So, three interesting areas to be looking at today. Hopefully, it would be kind of boring if we just kind of chop around here, but hopefully we get some action. Those are the big levels I'm looking at, and just to kind of cover what I just talked about, is this going to break us into new all-time highs? I would still say, guys, from a chart perspective, we do have the we've been talking about this a lot, right? Not rural. Total. Total too. We have a lot of things here. We closed this weekly candle. We tapped on top of that all-time high. Is this going to be the breakout, right? This is like big level for a breakout. If we can get up here and start some euphoria in the market, get the retail to come back in, because retail is not here, guys. I will say it again. Retail is not here. I would say this sentiment is, brutal, right? The sentiment is, I think people are just sick of crypto, and it's just interesting as you have Total 2 knocking on the all-time high. There's just like the masses are not here. But the question is, are you going to get the big breakout? This is a huge turning point, especially for altcoins. I guess equally as Bitcoin, but if we get above here, we can see that big breakout. Altcoins will do very well, but, this is also massive resistance. If we get the rejection there, probably not going to be as good of a look. So, but we have this. We have the Bitcoin dominance, which, overall, I would still say is, looking weak as far as the trend, right? Looking for lower highs, lower lows based off our high time frame money flow. Money flow indicates the overall trend. Daily money flow attempting to come back up here. But when we look at things like the 2-day and the 3-day money flow, you guys can see this is all coming out. This is what we saw last time we broke down out of that range for a massive altcoin season. And we got rate cuts coming down the line. Not that it has to be an instant pop to the upside. I'll be honest, guys. I do not think we see an instant breakout on the news unless they cut much more aggressive than anticipated, which I'm not expecting. So, Yeah. Shout out to Gig Long Bottom said, unfortunately, I feel like we have more time for downside. I mean, high time frame bear divs, we're right near massive resistance. And on top of that, right, we still have some time. We're on the 17th. We still have some time for September to end. Wake me up when September ends. We'll see. Typically we do see bottoms form in September. The question is, was that bull market support band test enough to give us that bottom, or are we going to have to wait for another, low to come in here? And, I'm not going to cover the big levels of resistance. Obviously, we do have the 107K level. Obviously, we do have the 105 to 104K level. I really don't want to lose 107K, guys. I would be okay coming back down, retesting this with a liquidity sweep, getting some nice bullish divergences on the higher time frames, such as the daily, right? We are potentially set up for that to play out, right, where you get the bigger drop to the downside, you get that daily bullish divergence, and then I would really like to bounce there, guys. I do not want to lose this massive golden pocket bull market support band. Last line of defense is going to be the $104,000 to $105,000 level near our 786 Fibonacci retracement, and I prefer, honestly, not to even mess around with this because, I would have to be very careful with long positions from this level because we're going to be breaking back down below massive resistance, which could open the door to $96,000 and below. So I would really much prefer hold on top of that golden pocket, but I'll just end that there because I've talked about this. Rates lower. Tony D, what was the somebody drop in the chat what the 0.25 was confirmed. Yeah, no shocker there. And that was already priced into the market, right? So there's in my opinion, we still have to listen to him speak. We'll see if he has a dovish tone. Maybe that dovish tone will get the little drop, right? And then maybe the dovish tone can help us break out. But there's our hopes of getting the breakout on the news right there, right? We would need 50 basis points or more, in my opinion, to see the breakout from here. So we'll see. Maybe we'll get tricked. Maybe it'll, maybe it'll just the unlikely situation will happen. But yeah, that's pretty much what I'm looking at here, guys. And we will be live streaming his speech. Shout out to Dar A said, oh my God, Darth Maul candle. Yeah, the volatility has begun. Are we watching the news? Yeah, shout out to New Earth Guardian. Yes, we will be watching him speak. Shout out to Hade Trader in the chat said, hey, Frankie, welcome in, brother. Let's go. Who would have thought? Shout out to Dar A. Yeah. Guys, the FedWatch tool is almost never wrong. I don't want to say they're never wrong, but it's very, very rare that they are wrong. So, we'll see here. We'll see if we can make our way down here. Do I have an alert set on this daily and weekly and POC? Let me go ahead. Let me go ahead and mark this out real quick just so we can get alerted in case we're looking at something else. And then just taking a quick look at Ethereum here, guys, just still within this volume profile that we looked at on yesterday's market update. And I'm just hoping for a move here, guys, in any direction at this point, right? Obviously, we have our biases long-term, all that. But, for the past few weeks, guys, it's been absolutely brutal covering this price action. It's been very boring. But Ethereum just still within our volume profile here, breaking above that 4581 zone is going to be the area where I would be looking for maybe some kind of continuation up. But if we can't get out of here, I'm going to be looking down towards the POC at 4,300 and then that local value area low at 4,192. Once we start breaking below that, we'll look at the bigger levels of support. But right now, Ethereum just still kind of bing-bonging in its range. Taking a quick look at Solana. Come on over to the alt template here. Solana just still getting the rejection from the value area high, bing-bonging around sideways. Next major level of support here, in my own personal opinion, is going to be pull from the low to the high here, right? The start of that bigger trend. Golden pocket POC sitting between about 218.16 down to the 786 at 210. This is going to be a pretty big level to watch on Solana, right? Because if you don't get the higher low on this level, if we do have to come back down there, right? If we don't get the higher low here and we lose that 786, we're going to be looking down towards about $192 for Solana. So this is the big level to be looking at on Solana in my own personal opinion. Let's see. XRP. Yeah, we can take a quick look at XRP. Bada boom. Actually, let's take a look at the local chart here real quick. Yeah, we're just still getting the rejection here from that POC that we were looking at, right? We have this key level up here, stay above this value area low. Next likely target is going to be that point of control, anchored VWAP, weekly horizontal, golden pocket. All this confluence up here was that next key level of resistance. We came up, boop. Now we're getting the pullback. So yeah, that is, at this point, right, as long as we can hold above this value area low, and ideally this 786. We lose that 786, I'm looking for a bigger drop down towards about 250 to 260. But as long as we can stay inside this range, the doorway to that POC does remain open. Is it likely that we stay inside this range? Well, daily money flow is in the red. does make you question the likelihood of continuing up through this profile. But if we do continue down, key zone of support to look at on XRP, 291 to 279. Golden pocket value area low 786. Once we lose that, we're going to be looking down towards the bigger golden pocket between about 260 and 250. So as long as we could stay up in here, right, maybe it bing bongs around, could be an ugly kind of rotation of the volume profile. But then, once you get above that POC, we can expect that value area high. Lose the 786, that is the doorway the line in the sand or doorway down to that 250 to 260 level, or 260 to 250 level. So there you go. Keeping it nice and simple for you guys. I don't want to overcomplicate you with every little individual intermediary level, but those are the major levels to look at on XRP. Taking a look at the higher time frame chart, again, we still have this bigger level down here. So yeah, not looking too super horrible. But yeah, we'll see if we can hold on top of this local range. So yeah, it looks like a daily green dot might be able to print here as well. Let's jump in here. Bada boom, bada bing. Let's see. Shout out to Kip, said LFG Mafia just rolled into the office at the farm to get to these charts. Get them, Frank. Shout out to Kip. Come on, baby. Push it up. Push it up. Let's go. Back to Bitcoin. Back at, volatility, baby. The volatility is real here. 116,184 getting the bounce back up here. Still just waiting for that 117 to 118.5 zone. Pull up the actual chart here. Still just waiting for this bigger level up here, to be quite honest. Not saying we have to get up there, right? Like bearish divergences, right? We have the high time frame bear divs. We even got some local bearish divergences in here. So, 45-minute money flow coming out, 12-hour bearish divergence and red dot printing. Would not be surprised. But again, this is not a normal trading day, guys. This is in a normal trading day. Bearish divergences, local bearish divergences. I'd be looking for lower highs and lower lows. I would have to say that's my bias here just based off the charts. But I am just going to say there could be a chance here that the charts kind of get wonked out on this crazy volatility that we're probably about to see when he starts speaking. Stay safe, brothers and sisters. Shout out to Darius. Yes, please use a stop loss. If you don't ever use a stop loss, guys, today is the day to use it. Do not blow up your account on this crazy volatility. XRP is all over the place, yeah. Shout out to Pose said, in how much time will we get the news? Anyone, shout out to Pose. It is a 0.25 cut, so that news is already out. We're just waiting for Powell to hit the stage, which I believe at Tony D starts at 2:30. Does he start talking at 2:30? Back to 115K, maybe 118K by the weekend and retracement. We ain't out the woods yet. Yes, shout out to, who said that? Shout out to Mr. Adam Gizzle. Shout out to you, man. Yeah, I wouldn't say we're really out of the woods completely. I would say breaking above this POC would be like the first good sign, but we got to hold above it, right? We don't want to come up in here, hold it temporarily on the lower time frames, and then lose it, right? That would be looked at as a potential lower high for a macro lower low. It would be much more bearish. And again, it doesn't instantly mean that we have to see the lower low, guys. We'll still have local levels of support to look at for potential bounces, but it's the same thing. I covered this on the market update yesterday. It's the same exact situation we were in last time. For more than one reason, right? You have the macro golden pocket 786. We had the point of control up in here as well. Once we got above this golden pocket, I was personally anticipating all-time highs. We did get that, but we did not lose sight of how important this 786 Fibonacci retracement was to hold on the higher time frames. We were looking at high time frame candle closures below that 786 as a macro lower high, right? You close that 2-day candle below there, the weekly candle below there, high, low, lower high, lower low to come. You expect that break of the structure to the downside, which we did indeed eventually get. But you had some levels here that we got some bounces off of, right? So at that moment, it's like, does the market still look like trash? It did here, so we look for the lower high and lower low. But, it's really that, this is why I say this is really the doorway to higher prices. Sure, we got it, right? But if you can't hold it on higher time frames, the chances of really getting the big breakout are less likely. It's the same thing here. We got to get above. We got to get above this golden pocket 786, and you could even see a break, right, and then a fake out like we did back here. And we shorted this all-time high all the way back down here, right, before we flip long in the position I'm holding right now that I just showed you. So, we really want a break and hold of the 786. I would say that, would be the line in the sand or to get us out of the woods personally. Now, getting above the POC would start to look pretty good, right? And I would say, well, hey, this increases the chances of all-time highs, but then you just have that last battle. And I would say this is probably a bigger confluent level of resistance than it is up here. We got 2 levels of resistance here, or 2 levels of confluence, and then in here we have those 3 levels of confluence. So, I would say this is probably a bigger level to get above, but you can't ignore that, right? It's not just, it's kind of the same thing here. It's like once we got above this POC, we were looking for retests into all-time highs, and we actually did take a long position here in the premium. We got the breakout, the retest. We took that long from the POC into all-time highs, but then we flipped short, guys. We are traders. We make money whether price goes up or down, and if we think that there's a fake out up here, I'm going to short all-time highs. I don't care how crazy it sounds to short all-time highs. If I think there's an opportunity, I'm going to take it, and this one wound up playing really well in the Discord, but again, right, we look for the all-time highs, but once you get that failed auction and we start losing the 786 again, then it starts looking like, well, hey, take that short. And if we lose that 786 on the higher time frames, this 786 on the higher time frames, right? Once we lose that again, it's like, well, hey, we start closing those high time frame candles below there. It's like, well, maybe that fake out of the all-time high can really play out for the break of structure to the downside. So it's the same thing here, right? Maybe we tap in here. Maybe we get a rejection. There are levels, again, around 113 and 112 where we can put in the higher low and the higher high. But if price action and money flow is looking like trash down there, I'm going to look at it the same I did down here on this bounce. It was like, well, hey, I'm going to hold that short. Sure, we get the bounce. That's nice. But the money flow indicated the continuation down. So we kept capitalizing on that short position. And just from a simple perspective here, the fib from the low to the high does sit between about 110 and 109.3. And if I pull this up on the bigger or the more marked up chart here, right, this full golden pocket 786, I know this looks super confusing. That's why I pulled it up over here, right? Like this golden pocket 786, I mean, ideally we hold the 113, 112K zone. I really like this level much better, but technically the full Fibonacci retracement, right? If we did get the pullback, maybe you get a higher low here. But if money flow is coming out, it's an if this then that statement. If we get the bounce there, money flow looks good. Well, we look for the higher low and the higher high. If we get the bounce and money flow looks bad, as in meaning it's coming out, well, then we look for the lower high and the continuation down. Very, very simple. So we'll see if we can push up in here today. But yeah, kind of mad, right? Or not mad, but kind of annoying that this bearish divergence wound up printing, at if we come up here, right? This wound up coming in, early, overnight, basically, right? So kind of stinks, right? Probably would have taken that trade if I was on the chart. But is what it is. It is what it is. We'll catch the next one. I'm still holding the long from 107K. Let's see. Update on ETH. Shout out to Muhammad. We actually already took a look at ETH. If you scrub back just a little bit, you will see it. We're basically just sitting in the same exact range we were in yesterday, so no real update there. 45.82. Getting above that zone there is going to be the big level for a potential breakout. But that's still not really the line in the sand. That's kind of just the local level. Really, the level we want to get above is this 786 retracement, right? That key level right here. That is the doorway where I would say very high probabilities, right? Lower high, you have your high, your low, your potential lower high. Where are you looking for your lower high? Within the golden pocket, within the golden pocket 786 zone. That is where that lower high is coming in as of right now. So until we get out of this volume profile, and from this perspective, right, it's like, well, if you get stuck in this profile, we're looking for the full rotation of the range. But if we get a breakout, right, you still got to get above this key level at 47.82 to really look at this as a sign of strength and a big rip into new all-time highs. So quick little update there for you. But yeah, there we go. Let's see here. 2 more rate cuts this year is super bullish for the end of the year. Shout out to Keith. Yeah, that would be very, very, very nice. Give me 118K, then dump it to 0. I want to close my long. Shout out to Daniel. Let's go. I did just to update you. I did just mention this. I did take some more profit on my long position in case we do get the dump from here. So I don't want to hold this whole position all the way back down. So I just wanted to lock in a little bit of money, and then once my stop loss is set down there, which it is not right now, I'll get stopped out in profit. Let's see here. Gold. Yeah, we could take a look at gold. No problem. Dot, we could try to take a look at dot. Let's take a quick look at gold. And we have been taking a look at gold recently here. Yeah, here is I'll just leave the line here on the chart because this is kind of my thought process or hope, right? Again, I wouldn't say this is guaranteed. But yeah, it does look like we are potentially pushing, or not potentially, we are pushing into this major Fibonacci extension zone between 3,600 and 3,734. We didn't know, right? We don't really know how far into this zone we're going to push. These are the key levels to look at, and when we look at the weekly time frame, I am personally hoping, right, maybe we get this little bearish divergence to form on the weekly. It's getting very close to invalidation here, but yeah, hoping these bearish divergences can start to smack down price, like even the 6-day bearish divergences, 5-day bearish divergences, 4-day, no bearish divergence, 3-day, no bear div, 2-day, no bear div. You do have the red dot, though, and then the daily, no bear div. The daily looks like maybe you can get one more push. maybe get one more push for that daily bearish divergence. But, the 37.34 level is going to be the big level that I'm looking at. Hoping for some kind of a reaction to the downside from this level. So there you go. Just kind of still chugging along here for what we've been looking for. 3-day red dot looking to print, 4-day red dot. So you don't have the bear divs on the 3 and 2 day, but you do, or the you don't have it on the 4-day either, but you do have the VWAPs coming down, right? So that would be nice. Just get some kind of a pullback there. Things got to retrace at some point, you would think. This looks a little squeezy in my opinion. There you go. A little quick update on gold. Let's see. Shout out to Pose. The rate cut is a 0.25 cut. Shout out to Pose. The news is out. It's out. It's all out in the open. We're about to go to zero. Shout out to Panda the Prophet. Oh, come on, man. I'm already sick. I'm already sick of the job at McDonald's, brother. I'm already sick of working McDonald's, man. I got to quit that job. Come on, Bitcoin. I'm just kidding. Let's take a look at DOT real quick. Yeah, Polka Dot just still nothing really to update here. Just still sitting above that value area low. And again, is it going to be very, very heavily tied to what Ethereum does? I'm not going to try to make any crazy calls here on Polkadot right now. Only thing I can say is you are inside your volume profile, which is better than not being in the volume profile. You're holding your Fibonacci retracement, which is nice. You have your low, your high, your potential high or low. Could look for the break of structure to the upside. But again, today anything can happen, right? You can get a crazy wick down, and then you wind up coming and breaking structure to the upside. So just be careful out there. Be careful out there today if you are trading, especially if you're like day trading altcoins. Very dangerous situation, in my opinion. And there we are, back down to the value area low. Oh, man, she's dumping. It's going to zero, baby. It's going to zero. Looking like a sell the news event for sure. We got the bear divs. We'll see what happens when Powell starts talking. Let's see here. Just pull up this. Let me pull up my face cam here real quick, guys. Just get this. Let me just get this all open and ready. All right, let me just play this and mute it. All right, so I will have this open on the other screen, so we are ready for when he pops up on stage. And here we go, back down to the value area low. Are we going for that liquidity down here towards the weekly and daily MPOC? Should we pull up the 1-minute chart? Oh my God, look at this mess. Look at this mess. Insane. Money flow coming out on the 1 minute. 15-minute red dot printing. Good Lord. Good Lord. 30-minute red dot looking to print. 45-minute money flow crossing into the red as well. And that with your 12-hour red dot traditionally would give you that continuation to the downside, right? You would look at that as that 45-minute indicating the trend will continue down here, looking for lower highs and lower lows. Again, I can't put a super high probability on that only because, or I would put a less weight on that just because of FOMC. Again, you could have that sign or that signal and then you get these crazy wicks, right? And then eventually it winds up playing out. Let's see, AVAX. Yeah, we can take a quick look at AVAX, no problemo. Let's see. Shout out to Andrew, says JP sucks. Shout out to Andrew. Yes, shout out to Mark S. Yes, we will be live streaming Mr. Powell talking. We haven't watched him enter the stage before if you were watching the waiting room. But yes, we will be watching him speak today. Absolutely. Hold me. Shout out to Ted. Come here, brother. Come here. I got you, bro. Hey, Frankie, could you maybe do an analysis on Hyperliquid sometime? I'd be really interested in your perspective. Yeah. Maybe we will be going live tonight again at 5:45 p.m. Eastern Standard Time. I'll go ahead and write down Hype. I'll take a look at that tonight on the live stream. Yeah. For sure, bro. If we have time today, I'll try to take a look at it as well. We got a few minutes here. Maybe I'll take a look at somebody asked for AVAX, and maybe we'll jump into Hype as well while we wait for this man to come in on his meeting. All right, so let's take a look here at AVAX. Still just sitting here. We've looked at AVAX almost on every single stream, and we are just sitting in here, guys. We're just sitting in this low volume gap. I would say if we're able to break these highs, very likely continuation through this low volume gap. These low volume gaps give you very little resistance or support on the way back up or down, right? Quick move up, quick move down. Very likely if we could stay inside here and break the highs, I would expect a fulfill of that gap all the way up to about 33.94, where we have the weekly MPOC and daily horizontal confluence. Key level number 1, key level number 2 coming in here between 35.66 and 35. 36.68, where we have a weekly high volume node, a monthly MPOC, and a daily horizontal. So if you are able to crack these highs, and again, not a lot of resistance inside this gap, right? So you could see that quick fill into these bigger key levels of resistance. So, but again, as I look at this, right, yeah, I mean, daily money flow coming out here, guys. There is a reason why I harp on the idea of this Fibonacci retracement. And there's no guarantee you have to come up and tap it either, right? But, maybe if we pull this from the lower high, yeah, I'll start to play around in here as well. This is still the biggest level. But, I mean, this is the doorway, guys. And part of the reason we're even paying attention to this is because of the daily money flow being in the red. Yes, it is attempting to come back up here, but we have the daily red dot printing. Money flow is a bit chopped up here. 2-day money flow, VWAP rolling over, money flow also rolling over here. Is this going to be a fake out on the 2-day money flow so we can get a big move up, or are we going to just get the continuation of the trend to the downside, which does make me very cautious around these key levels of resistance, guys, for macro higher lower highs, for macro lower lows, breaking that low here at $107,000. Hopefully we don't have to deal with that. But it is definitely in the cards here with the way money flow looks like right now. Don't forget to smash the like button, guys. Jesse says, what is wrong with all your like buttons? Smash that like button, guys. If you tap it, we don't care if you touch it with your fingers, headbutt it, creepily fondle it, touch it with your butt. We don't care, guys. We don't judge. Just smash it. And if you smash it at least an odd amount of times. Yeah, I'll take a quick look at hype. Let's jump in here real quick. All right, so we are above. Wow, we have not looked at this for quite some time. So I'm actually going to take all this off the chart for now. I'll refine those ranges if we come back down. But, I mean, as of right now, wow, pushing into looks like new all-time highs here, unless I am not looking at all the price history. But at least on this chart, let's pull this volume profile real quick. Pull up some. You are tapping into resistance here. Money flow. I mean, 2-day money flow generally trending out here. You got your fresh 2-day red dot. Checking the higher hourly time frames. 12-hour green dot confirmed. Or hourly time frames. 12-hour green dot confirmed. Maybe a little opportunity for a bearish divergence into the top of here for a bigger correction back down. Which in which case, right? This golden pocket 786 retracement. Where does this come in? Yeah, almost right in that same spot. Let me get rid of these real quick. 6.5. Get rid of that 7.86. So, yeah, this would be a big zone to look at to the downside from a Fibonacci perspective. Once you wind up losing this, I would expect to break the low here at 35.40. But just be careful. You are, I don't really see. You do have some, probably a 4-hour bear div. Yeah, you got some 4-hour bear divs confirmed up there. Higher highs, lower highs. Nice little drop back down. But yeah, if you could stay within here, next extension level sits at about 59.18. And then if you wind up breaking this prematurely, right, I would say the biggest level to look at is down here on that golden pocket 786 retracement. Let me pull an anchored VWAP here as well. Let's pull it from the actual low here. And there you go, right? So that's definitely going to be a big level to watch. So there you go. Just quick and dirty here. There's obviously a ton of other stuff you can look at here, but I'm just going to go quick and dirty here to save time on the live stream as I just continue to do the TA. Yeah, golden pocket value area high confluence here at about 48.11. Something to pay attention to. But yeah, I would say like bigger zone, probably going to be looking down here towards the POC value area low 786. Lose this, I'm looking to drop below 35.50. 35, yeah, about 35.50. So there you go. Quick little look at hype. Let's see. Let me just check in on this. All right, still not live. 2:30 p.m. Eastern Standard Time. We got a few minutes left. Should we play some background music here, guys, before he starts talking? Let me know if this is too much or not enough or too little. Or do you want it? Yes or no to the music? Can we hear it? This play in the background. Pump leading to the Powell speech. Well, let's see. Yeah, and the volatility, guys, look at this. Oh, boy. Oh, God. Look at this. FOMC volatility to a T. F the longs and F the shorts. Let's zoom out just a bit. Yeah, my bias still remains the same on Cardano. Rejection from the value area high. Potential acceptance into the range. Acceptance into the range with a potential roadmap to the POC and the value area low. I'm not interested in a trade up here on Cardano. Why is that? Well, it's kind of just floating around here in nowhere, right? It's like no man's land up here. I would much prefer a drop down into the point of control golden pocket / value area low / 786 for a higher low and a higher high. If we do not come down there and we rip up from where we are and break out for some reason, I am happy missing that. I would much rather miss that position than take a low probability trade from that position, right? Much rather come back down here. Let's see. I'm scared. What is happening? It's so bipolar. Shout out to Amina. Sit on those hands. Sit on those hands, Amina. It's that FOMC volatility. So for Cardano here, guys, I would be looking between 70 and 61 cents. That's my next major area of interest. And if we get the shocking breakout here, I'm happy missing that, right? Not that I oftentimes trade Cardano anyway, but if I were trading this, right, I'm happy sitting out on this and, waiting for a bigger key level to get tapped here. And again, when you reject the value area high like this, especially off of some high time frame bearish divergences, right, what do you have? Bear divs into your value area high, making the next likely roadmap for price to get you inside of that range and continue that move through the profile. Next likely place for price to go, point of control, and then the value area low once you lose that POC. So that's what I'm looking at on Cardano. And is there a reason to anticipate that full fill of the range? Well, again, I don't know what's going to happen here on FOMC, but looking at our money flow here on the daily, guys, I don't think anybody can argue that this is trending to the downside, which means I would anticipate lower highs and lower lows overall. So we'll see what happens. Maybe FOMC gets bullish, maybe super dovish, and then we get the big rip to the upside. Let's see. Silent Q says, turn the volume up, bro. Let's go. Is it too quiet? Is the music too quiet? Let me know. Is it too quiet? Is it too loud? Let me know. Let me know. Cardano is dead. Shout out to Crypto G. I mean, maybe. I don't know. When I would call Cardano dead, maybe if you were down here. Maybe then it's dead. But yeah, I don't really see a reason to call it dead. I mean, it's just chopping up here. It's just grinding to the upside. Also, by the way, holding key higher lows on Fibonacci retracements, right? Especially this 786 was tested a bazillion times and miraculously, at least as of right now, miraculously holding as support, right? Which is the level that you do not want to break below. If we break that 786, I would see that as a massive, or not, I wouldn't say massive, but a much bigger sign of weakness for Cardano. This would be much more bearish, right? If you could hold above that 50-cent level, right, I would still say you have your low, your high, your higher low, higher high, higher low, potential higher high. Maybe leading into the macro retracement levels at 2 to 250 and beyond. But yeah, now no reason to call this dead, in my opinion. Maybe dead as in like not moving. I would agree with that. Let's see. Oh, shout out to Crypto Jesus says, I just mean the chain metrics. Yeah, for sure. Let's see. If Powell clears his throat, we're if Powell clears his throat wrong, we're all done. Shout out to AR Perez. Yes, that could be the case. Solana, we actually already took a Solana, but we took a look at Solana. Still rejecting from the value area high. My next big area of interest on Solana is going to be sitting down here towards this blue box, Golden Pocket 786 POC, 218.56 to 209.54. That is going to be the yeah, that will be the next major level to look at for me personally. Again, same thing for Cardano. It's like, do I take a trade at this level? Not really, right? Like, unless I was scalping a super lower time frame, right? For major bounces or anything like that. Like, this is just no man's land. You're rejecting off the value area high. You have your 3-hour money flow coming out. If I want a big move to the upside like this, right, what do I want? I want this money flow being in the red, crossing into the green for a fresh trend to the upside. This looks like it might want to cool off a little bit more. And you take a look at the 8-hour money flow also coming up. Green dot looking to print on the 8-hour, but that is, again, going to be looked at as more of a, daily money flow starting to creep out here as well. So, yeah, just not an area I'd be interested in. But what if it pops up, right? Well, I'll just let it go. It's totally fine. I would much rather just sit on my hands, because then you're going to avoid, if you just get chop up here, you're going to avoid all that. And then, eventually if you come back down here, you're going to look back in hindsight and be like, why did I even look at all this chop, right? I should have just waited for the key level. I got chopped up in here and then finally got my level hit anyway. So, yeah, definitely 218.30 down to about 210 209.82 is going to be that next big key level. All right. Let me just go ahead and pull up. Hang on, I don't want to share anything super secret here. Let me go ahead and pull up. We got Powell about to speak here. Here we go. Oh, man.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point.
Can you guys all hear this?
We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant.
Get out of the shot.
In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thanks, Dad.
Thank you.
Thanks.
Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Well, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply. and to the
Shout out
point
to Poppy.
where we see
I'm still holding the long.
what
I
I've
just
called a
took a little more
curious
profit.
balance. It's typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmerosa of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant
Mark
a
Zuckerberg.
restrictive policy setting?
That is Mark
So
Zuckerberg
I don't
in
think
a disguise.
we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers
Looks just like
for
'em.
May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward
He just wants to know
inflation.
about Bitcoin.
I would say they're moving
posing as a
toward
journalist. Yes,
equality.
I'm
Maybe
gonna
they're not
pop my
quite out of
bags.
equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
That's Mark
wasn't
Zuckerberg. I don't
widespread
care what
support at
anybody
all
says.
for a 50 basis point cut today. I think we've
You're not
done
that slick, Mark. You're not
we've done
that
very
slick.
large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when we feel that policy is a place and needs to move quickly to a new place. That's not at all.
Come on. Do you guys see that? He's a reptilian. He's morphing, guys. He's morphing. All right, they took him down. They took him down, guys. The heck is going on here? Come on. Come on, Fed. There we
I
go.
think we can
Oh my God. The owners don't want us to see this. He just said BTC to the moon. They cut it. They cut the live stream, guys. Bitcoin getting a bit of a pushback here. Or not bit of a pushback, but a bit of a continuation to the downside. 45-minute money flow. Will it be correct? 45-minute money flow with the 12-hour red dot on a normal day would indicate the lower highs and the lower lows.
In place. I guess I'm just, trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago with the fact that the forecast for unemployment didn't change.
Come on. What the heck is going on here? Every time it pauses, Bitcoin dumps more. Every single time. Holding on top of the value area low. We lose this. Next level is 114,253. Yikes. We got the charts against us here. And we got Powell not really helping us out at all. She has pretty eyes. Shout out to Andrew Sawyer. What is going on here? Let me try to... Come on. Come on. Don't cut us off now. Don't cut us off now. Give me 1 sec here, guys. Let me do a quick little refresh here. Quick little refresh. Is it just too many people
Towards
watching?
more
What is
cuts
going
than
on there?
just
All right, there we go.
3 months ago with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth next actually ticked up just
When they-
Gotta pay Comcast, Frankie. I didn't pay my internet bill, guys. Do you have dial-up? Yeah, apparently we got dial-up here. Apparently, yeah, guys, I don't know what the heck is going on here. This has never happened before. They're trying to hide the reptilian morphing. Mark Zuckerberg was in the crowd there, and that was it. What the heck is going on? Nothing happening on BTC. They're hacking us. They're hacking us. Close EXO. Shout out to me. Shout out to Mito. Hilarious, bro. I literally just closed EXO charts, but it's not that. I don't know. This is an internet thing. Come on. Not the day. Not the day. I'm going to have to do another refresh? Come on. Reload video.
Actually, the projections for growth next actually ticked up just. This
is brutal. This is unwatchable. Is anybody else having trouble with the stream there? Or is it just me? We're getting a dump. I'll pull up the chart right now while that's loading. There is the loss of the value area low here, guys. 114,253 is the next place I am looking. We have that liquidity sitting down there as well. Is the liquidity going to suck us down? Are we going to get that swing into the liquidity? It's Mark Zuckerberg's vibes messing up the camera. Yeah, it seems to be. Seems to be. That's happening to all the streamers. Interesting. There might just be a ton of people watching right now, and it is just causing mayhem. Mayhem. Bitcoin continuing to get the push down here. We'll see, guys. We'll see. Is this the we're going to talk about this the next couple of weeks? Like, guys, remember the 45-minute money flow was indicating the continuation down? It was indicated up here. Oh, man. Oh, man. We'll see. Stream is busted here, guys. The stream is busted. Shout out to Poppy22 said, I thought it was going to suck up for the liquidity, not slobber down to the liquidity, but in the end, it's all for the love of liquidity or liquidity. Shout out to Poppy22. Man, if you're watching the stream at home, guys, log out so we can get a better signal here. Let me go ahead and let me hack the mainframe here real quick, guys. Hacking the mainframe. Totally chopped up here, guys. I can't fix this. This is insane. This is out of control. It's just broken. It's just what am I supposed to do with this? I guess cover the important thing, which is the charts. I'm just going to let that run in the background, guys.
All the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has
can't defeat this, guys. Does anybody know if he's tried plugging it in, unplugging it, plugging it back in? That does typically work. Bitcoin getting another bounce back up here, back above that value area low. Can we get the bull div on the 15-minute? Can we get it? Can we get it? I don't know. Playing with key support here, guys. Key support. Come on, Powell. Come on. Do we have to watch you in a small screen or something? What's going on? I can't even change the quality either. Quite annoying. At least Fox Business is having issues. We're not the only ones. Bitcoin continuing to pop up here. Come on. Come on, baby. It's that 15-minute. Come on, give me that 15-minute bull div and a bounce back up. Fox Business having trouble clear as day on CNBC. Well, shout out to CNBC. How the heck are they doing it?
Softened.
There we go.
So the case for there being a persistent...
Can't let it play for more than 2 seconds, guys. I don't know what's going on here. I might have to cut this and just stay on the charts. Federal Reserve is good. They got the they got the direct line. Go to YouTube. Let me see here. See if we can do this. Where we at? Where we at?
At Granger.
All right, I'm going to try a new stream here, guys. Oh, it's not logged in, so we're going to have to deal with ads. That's going to be a nightmare. Come on, just work. What the heck is going on here?
Low.
Don't do this to me, Powell. Come on. Come on. All right, guys, bear with me for 2 seconds here. Give me 1 sec. Come on, baby. Don't do this to me, Powell. Give me a break. Give me a break, bro. Come on. You're already hurting our feelings. Everybody get off the Fed live stream, Fed YouTube channel. Come on. Come on, Fed. All right, you know what? I'll pull up the chart for now. I'm going to try to fix this off screen here, guys, because this is not going to work out. I don't know why that's not loading. We've never had a problem with this. I did not expect this, guys. Let's see. Yeah, it's annoying. I don't have premium on this account, so we're going to have to deal with ads. It's going to be try to buy it really fast. Okay, this might work. This may work.
All right. Inflation. So we have a situation where we have two.
Now the other one's working.
And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of this, of the tension between the two goals.
Losing
How
the
do you
value
weight
area
them?
low.
How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right there that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now. And people they're making their arguments, and we're having a great discussion around these challenging issues.
That's a good hypothesis.
Do you you see the court case around Lisa Cook as being related to questions of Fed independence?
You know, I see it as a court case that it would be inappropriate for me to comment
Olgar
on.
said, what do I see on the charts? I see a 10-hour bearish divergence. I see low
Thanks,
time frame
Mr.
bearish
Chairman. Edward Lawrence,
divergences.
from
I
Fox
see
Business.
12-hour red dot,
we saw the
45-minute money
preliminary
flow crossover
benchmark
into the red,
revisions
indicating more
down
downside.
911,000. The revisions for June were the first negative revisions we've seen since December of 2020.
Thank you, Tony.
You know,
Way to
how
go.
can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW,
Hey,
the
Tony, you're number
revision
one, by
that
the
we
way.
saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%. Declining work week, difficulty among college graduates finding work.
Shout out to Golden for the 50
Rising
memberships. Thank you, bro. I
Rising
appreciate you so much. Let's go. Drop those golden emojis in the chat while we listen to these people say a whole lot of nothing.
I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see
Dylan says where we're going.
minority
We don't need windshields.
unemployment going up. You
Ride the
see
bike,
younger
baby.
people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi,
Put
Stephanie
Zuckerberg
Rule,
back on.
MSNBC.
Come on.
Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Bank, Federal Reserve System, and at the board.
We're putting that on a shirt, Golden.
We're
Let's
actually
do it.
going through a 10% 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to to always trying to do better.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
What evidence?
You can take goods, just sort of the broad goods category. And last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are not
Thank you, Golden.
mostly
You're
not
the goat.
being paid
Let's
by
go, baby.
exporters, mostly being paid by really the
Golden
companies
the god.
that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Sick. I have nothing new.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
What do we think, guys? Let me
Claire
know.
Jones,
Hawkish or
Financial
dovish?
Times.
Let me
Given
know
the
in the chat.
range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss
Trump
this
is selling.
Between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint,
Just say you're not gonna cut,
of what
bro.
we're
Just say it.
trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now.
Shut up the K diggity.
It's not incredibly obvious what
Poor
to do.
Steve.
So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Shout out to Warlock. When BTC Moon? That's what I'm saying.
Thank
Somebody
you,
just
Archie
asked the
Hall from The
question.
Economist.
Somebody's
You
gotta crash
mentioned
this meeting.
earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
This kid's
You know,
13.
so there are many different ways to calculate it, and
Got kids,
none of them
Mark
is perfect.
Zuckerberg in the
but,
chat.
You know, it's
Or in the
clearly
crowd.
come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly, and that's because
that price
a very lower amount of people are joining the labor force. The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. You know, it's interesting that supply and demand have really come down together.
Golden
so
with
far.
another 50
Except now we do
memberships.
have,
Let's go. Shout out to Golden. I
unemployment
love you, bro.
ticking up
Thank you so much.
Outside,
Golden
just one
emojis in the
tick
chat right now,
outside of
guys. Let's go.
The range
I feel like
where
I'm
it's
yelling
been
in
for
a
a
meeting.
year.
I feel like I have to talk very
4.3% is still a low level, but you know, I think this level of this speedy
this guy in his big
decline
purple
in
tie.
both supply and
Me
demand
too.
has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected. What we got earlier this week, I guess. And also we're getting, you know, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question.
No problem,
Given
Nicole,
the
no problem.
cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
You know, housing is an
rejection
interest-sensitive
from the
activity.
Fibonacci retracement level.
So it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we
gotta run to the
raise
bathroom real
rates,
quick. I'm gonna go
you're
pee,
right, it does
and,
burden the housing industry. And
I bet Bitcoin moves. I'm not
so
gonna lie. It knows
rates
when I walk away.
Have
I'll
come
be right
down a
back.
bit, and
Watch
as
Grandpa
that
for
happens,
me.
we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates. And that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Not good.
Well,
Not good.
I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has three mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
How about this? How about just stop speaking in backwards riddles and just talk in normal people terms? That's my 2 cents.
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices, so that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
You know, we're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, you know, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with
chat
MNI
analysis.
Market News.
Let's go. Shout out to Darren.
I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, I'm wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations, both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of, you know, running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that, you know, we need to, you know, continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But you know, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. I don't. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
Well, all right. There we go, guys. There we go. I don't know if I like the sound of that. It was kind of just the typical, like, backward speaking. Like riddle. Someone said he used to be a lawyer, I think. Makes sense why he speaks in riddles. Yes. Yeah, not, you know, I don't know why it's like they choose. It's almost like they choose to speak in these, like, over your head type stuff to keep the normal person, right, the normal investor having to, like, try to, like, I don't know, like, there's got to be a simpler way to do this. But I wouldn't say it was super dovish. You know, it's not like he was saying they were going to continue to cut aggressively or anything like that. I mean, man, what a difficult situation just from a price action perspective, guys, pushing into the local Golden Pocket 786 here. At this point, right, we got to let the market digest this information. And yeah, I mean, I think it's really hard, right? Really, the big obvious thing would be a higher rate cut than we anticipated, which would have very likely given us a massive rip to the upside, a potential breakout. But now we're just kind of stuck in this muddy water still. And yeah, I wouldn't say he was necessarily extremely dovish. So at the end of the day, guys, if we're talking worst case scenario here, right? And from a chart perspective, I would still say 10-hour bearish divergence. We looked at this on the live stream the other day to anticipate our higher highs on price action to form that bearish divergence. We now have that printing with the rejection from the daily. This 12-hour bearish divergence or 10-hour bearish divergence, the 12-hour bearish divergence with our lower time frame money flow coming out. This, from a chart perspective, does indicate more downside. We always talk about this, right? Money flow crossover into the red. This is very likely, right, with that 12-hour red dot printing, giving you those lower highs, lower lows. So, you know, locally here, if we put in that lower high, Doesn't mean it's the only place you can put in the lower high, but the next place is going to be this golden pocket 786, sitting between $115,675 and $116,000, $115,981. If we can get above here, maybe we can go for the bigger retracement into our full fib retracement, which gets closer up towards that POC. I mean, at this point, we're inside the volume profile. I'll just take this off the chart real quick. We're inside the volume profile. If we get a sustained bounce from here, we do have the 15-minute bullish divergence, which did confirm, giving us that continued bounce at the value area low. You know, if we come back up and retest this POC with the Fibonacci confluence, could be a big area of, up towards the daily, right? Not the POC, obviously, because we're pulling the fib from up here, right? So the daily 786 is confluent here. I would say this is kind of the line in the sand, right? If we can't get back above this 786, well, chances are we're probably not going to come into that bigger level of resistance that I am personally looking for, right? That would very likely give us a local lower high for the continuation of the local downtrend. We still have a bunch of support down below, but at the end of the day, yeah, I mean, we still have the liquidity sitting down here towards 112. I mean, kind of, I don't want to say a nothing burger. I mean, we don't usually see a ton of volatility. A lot of times on FOMC, you'll just kind of get like little wicks. Not a ton of crazy stuff happening here, right? Oftentimes you will see the market actually pick a direction after the live stream ends, and we have some time to kind of let the market absorb that information. But, you know, from this standpoint, I would still say, right, with the honorable mention of this 786 POC, this is now a new, very key level of resistance on the chart. And the reason for that is because me personally, right, I am favoring, right, if we push into this $117,500 to $118,500 level. This is really the big area to put the lower high in my own personal opinion, right? But there is no guarantee we get up there. So I would say in the meantime, right, if we're unable to get up here, this 786 daily is the level to be looking at, right? Because if we can't get above that 786 golden pocket daily zone right here, right, well, then you could just continue the local lower highs and lower lows, which the 45-minute and the 12-hour are potentially supporting here. If we break above that daily, then I'm simply going to look up towards our bigger level. Again, I would prefer this. It's a much bigger level of resistance, but you have to deal with what the market gives you. So we do have this local 786 popped up here, and the daily sitting at about 116,860 to 116,700. If we can't get back above that, I would expect a lower high to come in here for the lower low to come in, break down below the range, come attack the daily and weekly MPOC, and potentially the 113 to 112K zone. But for the most part, nothing too exciting here, guys. We got the bull div. Looking for the potential continuation up here. I was low key. It's annoying that I closed exo charts because I wanted to have exo charts in there so I could actually watch the orders, see if there were any indications that we could get a bounce here. Darren said we had some absorption here at the value area low, which very oftentimes will give you a pop to the upside. So shout out to Darren for that call in the chat. But yeah, I would say the next key levels to look at are definitely going to be the full golden pocket 786 of the local move down here. Golden pocket sitting at 116,276. 786 sitting closer to 116,800, 116,900. So locally, maybe we get off the live stream on our way to the 5:45 p.m. live stream. Maybe we push up here. Maybe you guys will see me short from up here. I don't know, but I would be looking at these levels. And then locally, obviously, we are rejecting, currently the local 786 as well. So again, we could still see some aftermath, aftershock volatility come in here. So be careful out there if you're trading. But yeah, we'll see. I mean, these are going to be the local levels to look at. If you break above this 786 here at about 116,134, then I would be looking up towards that bigger fib. But yeah, we'll see here. We got the bull divs, money flow trying to round off here. Come on, 3-minute money flow back in the green. 7-minute money flow coming back up. Yeah, we got the 90-minute, the 1-hour green dot looking to print. So yeah, maybe we can get a little bit of a continued bounce here if we can break above that 786 at 116,130. But we'll see what happens here, guys. I am still holding that long position from the low. Luckily, did take some more profit here, took a little bit more profit up here. So we'll see what happens. For the most part, the bigger levels, guys, are still going to be sitting up here with the honorable mention of that daily 786 at 116.8. And then down here at $113,000 to $112,000. I'm going to jump in the chat here real quick. See what you guys are thinking. How did he sound? Let me see. And by the way, guys, shout out to Golden. Thank you for gifting the 100 memberships, bro. We were in the middle of the live stream. I appreciate you so much. Thank you for doing that, man. I appreciate you. I know the Mafia appreciates you as well. They dropped those golden emojis in the chat. Golden with a super chat here says, I have ChatGPT-5 running analysis on the press conference in real time, and so far it is saying he is full of shite. Shout out to Golden. Oh, God. AI is just like, man, you guys still believe this wacko human? Shout out to Golden. Thank you for that, bro. Hugo said, hello from Sweden, my friend. Always tuning in when possible. Shout out to Hugo's. Welcome in, bro. Thank you for being here. You've been here for a little while. But shout out to you, man. 0.25 was baked in, so might dump, but pump back up by end of week. Yeah, so for me personally, right, like that's kind of our anticipation going into this is like if we get what we expected, which I was personally expecting, really like the big move would have likely happened here if we got the if we got like a higher or a bigger rate cut than we were expecting, right? If they came in 50 basis points or something like that, it probably would have gotten very volatile to the upside. But this is mostly baked into the chart here, guys, right? Like the anticipation of the rate cuts have been going on for a while. We've gotten the rise to the upside. And one of the things that has had me worried here, other than the daily money flow coming out, other than the two-day money flow coming out, right? Other than all of this, it is also the fact that we are approaching major resistance here. So, and even looking at this on the 2-hour, right? Like even the 2-hour money flow crossing into the red. We got the high time frame bear divs, money flow coming out from a normal, and like I said in the beginning of the stream, on a normal trading day, right? I would be looking at this as a 10-hour bearish divergence, right? Into a daily key level of resistance, higher highs, lower highs. There's your discrepancy. Typically indicating a correction. We did get that. Like I said, I would very likely be short from here if this didn't happen at like 2 in the morning. But 10-hour bearish divergences, 12-hour bearish divergences, 16-hour bearish divergences, daily red dot printing, and on top of the 12 and 16-hour bearish divergences and red dots printing, we have the 45-minute money flow coming out. We have the 1-hour money flow crossing into the red. We have the 2-hour money flow coming out here. This does, on a normal trading day, indicate a continuation of the downtrend, right? This is just what the TA says. So, you know, that would be my bias on a normal trading day, expecting volatility on FOMC. Thought maybe we can get stepped on, but it does look like, at least as of right now, that the charts are remaining the higher probability here, right? So I would be very careful of continued downside here, guys. The one thing that I don't love, my tone here would be much different if we had tapped into this key level of resistance. At that point, I would be very concerned of the macro lower high being in for a massive drop to the downside. But we just didn't tap that level. Doesn't mean you can't come down from where we're rejecting right now. So from a technical chart perspective, you know, it does look a bit more bearish. I was talking to the premium Discord about this earlier. On a normal day, this looks much more bearish. And we didn't really get anything super, you know, what's the word, like prolific come out of his mouth or anything that was like super clear that he had a super dovish outlook in the future. I would say I didn't really see a lot of that at all. So, you know, I would still kind of lean on the charts here, right? Like charts are saying down. It's going to be your higher probability no matter what. And yeah, I mean, if they cut 50 basis points, right, like that would have very likely just stepped on that idea in total. But yeah, I would still say this is in play, guys. Be careful of these bearish divergences. Money flow clearly coming out here. Could you get the fake out? Absolutely. Just like anything in trading or TA, guys, nothing is 100% probable. But I mean, it is the higher probability outcome here, in my opinion. So we'll see what happens. It doesn't mean bear market necessarily, right? Like, we'll let the market digest this. But, yeah, I mean, if we do get the bigger drop down, right? Like, I mean, how far away are we here from, you know, 3% dump? That's nothing really too big. But I would say 113 to 112K is the next big zone of support. And then more over that, I would say the full golden pocket POC confluence sitting right here, between about 111, 181 and 110, 661. And then underneath that, we have the value area low and the 786 sitting right here with the weekly MPOC. We lose this, guys, obviously. I'm expecting new lows to come. The worst case scenario, and I covered this in the beginning of the stream, is like if we do come back down to those $107,000 lows, maybe this journey to the downside, if we do get it, can give that daily a little bit of time to come on down and give us a little bit of a bullish divergence on the daily, right? Take out the liquidity, get the bull div on the daily, and then maybe we could look for a bigger move up. But, yeah, nothing really kind of like, I don't want to say a nothing burger, but, you know, you didn't get the exciting thing, right? We got the what was expected. So, yeah, be aware of that money flow and those bearish divergences. Let me jump back into the chat real quick here. Let me come on down to the current chat. I was all the way back up there. Shorted the 4-hour bearish divergence on BTC. Shout out to Mr. Call. Mr. Call. I thought it was Mr. Cali. But yeah, you know, it's not, and again, not only, right, well, there's your 4-hour bearish divergence right hither, higher highs, lower highs, right up there. 4 a.m. unfortunately for me, personally, from where I'm from. But yeah, I mean, 4-hour bear divs, like I've just generally looked for moves down on these, right? Especially when it's confluent with the higher time frame red dots, lower time frame money flow coming out. So would not be surprised, guys, if we get the bigger pullback here. The one thing, again, my preference here is I would just love, if we just scammed up here, I would love to come in here to take a higher probability short. But the signals are here. You don't have to come up and tap these key levels. It's not a necessity. So yeah, I mean, just definitely 4-hour bear div, like even on the lower time frames as we looked at before, you even had some lower time frame bear divs up here. Lower highs, higher highs, there's your drop, right? So yeah, and then just the market cipher B116 strategies playing out as well. So yeah, I mean, again, for me personally, guys, the real big line in the sand for me to like really start to look for a much bigger crash on Bitcoin, and I will call it a crash rather than just like a pullback. You know, nothing really crazy has happened here, right? We're still hovering up here, right? We're sitting at 115, 700, right? It's not too far off from where we've been, right? Like even last Thursday, right? We're like sitting, you know, we're just kind of wiggling around up here, but you know, I would love this, but I will say with the signs on the chart, that is not impossible. So yeah, but the bigger line in the sand here, guys, 107K, like if we come down there and we don't get the SFP for a massive bounce up, losing this $107,000 level, guys, is absolutely massive in my opinion. And the reason for that is, as I've said on every single live stream that I've done in the past couple of weeks, is going to be, it's the fact that this is major support. We break down below this golden pocket, guys. I'm okay with the liquidity sweep, right? I'm okay with that, right? Close the candle above, right? I'm okay with that. Once we lose this golden pocket, guys, the last chance to bounce is the 786 and the $104,000 to $105,000 zone. If we can't hold this, I am going to be anticipating a much bigger crash on Bitcoin, targeting probably down towards $97,000 to $96,000. We have some other local levels of support that we can look at for fake outs, or maybe the market can turn around. But at this point, like this is huge support. We lose this, it's a sign of weakness on Bitcoin. Last chance to bounce here, we lose this. You're inside your volume profile. The POC becomes very likely, unless you can. You do have a lot of confluence down here at the $102,000 zone, but you're losing the 786 at that point. It's not going to be a good look. And even if we do bounce there, as I've covered many a times, right, you have to be very careful on these bounces, because you could just rally into the value area high, get accepted, and then go down for the bigger move. So I will be looking for long positions down here, but it's just, just like here, right? We looked for long positions. I took the long position. I'm still holding it, as I showed earlier in the stream. But if we lost this, right, like it's a massive sign for Bitcoin, right? It's a massive bearish sign. And if it looked, right, and we kind of are doing the same thing that we would do here, right? Like with daily money flow coming out, with 2-day money flow coming out, this could very well be a lackluster retracement for a lower high and a lower low. If it doesn't end something like this, I would start to really worry about Bitcoin headed down towards the 90s, right? Value area low sits about $90,000 to $92,000. So that's just like what we have down below us. And if I get rid of some of the intermediary levels here, and we just look at this from a volume profile perspective, it kind of makes sense. It'll be easier for like a beginner to understand why this makes sense. Because once we get accepted into this volume profile, the probabilities of filling that range in full become very, very likely, right? So let's say we come down here, we don't get the SFP, we lose the golden pocket. That's the first sign of weakness. We lose that 786 at 104K. At that point, right, it's like you get accepted in here. I am always going to be anticipating the POC and the value area low next if you can't hold the point of control. In this case, I would probably be anticipating an eventual fulfill of the range. Could you get bounces off the POC? Sure. But if that 2-day money flow is still in the red, right, you're going to be anticipating something like this, which would not look very good for Bitcoin, in my opinion. So that's what I'm looking at. The laws of the volume profiles very, very, very rarely lies, right? It is a very strong law. That's why I call them laws and not just like rules, right? Because very often they will happen. So yeah, I mean, that's my overall thought process. Long-term remains the same. Locally, kind of a, nothing burger, I guess you can call it. But we'll see if we can get above this local 786, and it does look like we're getting the rejection here. So I'll keep you guys updated here on the live stream. I'm going to come, we're going to be live at 5:45 p.m. Eastern Standard Time, guys, again, by the way. Shout out to Perry, said, did not get that BTC short. It was 6 in the morning. I missed it, but still holding the short on Solana, Frankie. Shout out to Perry. Caught that Solana short at the value area high, if I remember correctly. Let's go, baby. That beautiful, beautiful rejection off our value area high. Speaking of the laws of the volume profile, guys, the whole reason we anticipated this value area high to get hit ever since we broke above the value area low is because once you get above that low, the POC is the next stop for anything, right? Solana in this case. As long as you stay inside the range, The break into the POC is still open. Flip it to support. Next target, value area high with beautiful, beautiful, beautiful textbook confirmations up here. Bearish divergences on many different time frames. 4 hour was absolutely textbook. Higher highs into your key level. Lower highs on your momentum waves. Drop to the downside. So, yeah, I mean, the value area low, PLC value area high. It's very confusing. It's very choppy. You get the big pullback. Oh, my God. But the law of the volume profile plays out once again. So when we take a look at that on Bitcoin, it's like you could see why it is so alarming to me if we get accepted into this massive profile. This is a massive range, guys. Massive high time frame support. You get stuck in here. That drop through the profile is not some willy-nilly rotation, right? It is a massive, I mean, from where we are right now, you're looking at like a 20% drop on Bitcoin. So, you know, we can't really call for that until we wind up getting back inside this range. That is where I will entertain that with the last opportunity to bounce off that $104,000 786. We'll have to approach the situation when it comes, right? What's money flow look like down there? If it looks really good, we can look for a bigger bounce. If not, you guys will see me up here calling for lower highs and lower lows. And I will say, if we are seeing those signals, the highest probability will be that fill of the range. So, you know, but when you look at it from here, right, we're still holding the support very nicely. You know, still got plenty of room to come down for higher lows and higher highs. Until then, but yeah, that is what I'm looking at. I go to bed every night listening to, I guess that means you. Shout out to James. Patient are winners. Yeah, shout out to James. Patience is, it's like, they usually say, like in trading, right, they say practice makes perfect. I think a lot of people probably over-practice or are over-researching, over-studying for that, you know, that fire strategy, that fire confirmation, that fire way to find key levels, that fire signals group, right? But they're all searching for things that don't exist, right? In my opinion, it's patience and patience and psychological control, right? Patience is one of the big things. And, you know, again, just because of the situation we're in right now, it is possible to not come up here to that golden pocket, but more often than not 10 out of 10 times, but maybe 7 out of 10 times, right? You're going to be better off just waiting for the key level. Maybe we even drop here and then hit the key level and get that short setup, right? But, you know, trying to get chopped up before you hit your key level is always going to be a losing proposition, in my opinion. I'd rather let price chop around and then wait to push into that key level, and that was exactly what I did here. We had our $115,000 key zone of resistance sitting here on the value area low. Obviously, took the long from the bottom here, and I was not taking profits. We took very few scalps in this chop in the Discord, but for the most part, just patiently waiting for that key level to get hit. And more often than not, you will see that happen. Now, don't get that mistaken with 100% of the time, but you know, patience over pretty much anything other than psychology. Let's see. Sui breaking out. Interesting. And then also, guys, as I was in that live stream, right, we were looking at gold getting a little nice little pop to the downside here on this 4-hour bearish divergence. Is this the start of the breakdown on gold? I don't know. Honestly, after that Fed meeting, it's you know, I don't know if my hopes are super high, but you got that 4-hour bear div. You can get this thing to continue to cook down. That would be right in line with what we were hoping for. So yeah, somebody said Sui breaking out. Let's take a look at that real quick. I guess we could play some background music too. Let's see here. Pull up my actual Sui chart. What is our Sui chart here? Is it Bybit? Did I delete my Sui chart? Don't tell me that. Oh, no, there it is. All right, let's see here. All right, so on Sui, there you go. Golden Pocket Daily Confluence here. When did we hit this? We must have talked about this already. Did we talk about this on Monday? I don't know if we looked at Sui, but we had our key level here. I don't know if we talked about it before. I know we talked about it before. I don't know if we were here and already talked about this tap, but here's our Golden Pocket Daily. Look at that. Look at that support. You get the rejection here from the weekly. You get the pullback. You pull your fib from the low to the high. Always going to be a key level of support here. Full golden pocket retracement of the entire move. Right? You also have the confluence on the daily. We pushed in. We get the bounce. Is this massive for Sui? I mean, I don't really know. I wouldn't say so. Right? 3-hour money flow still coming out. 4-hour money flow kind of flat there. 2-hour and 1-hour money flow in the red. Let's check the 10-hour. You don't have the bearish divergences. Check the 12 hours. 12-hour money flow looks good. 16-hour money flow looks good. Daily money flow looks like kind of like trash, to be quite honest. So yeah, I would be careful here of your lower highs and lower lows on SUI. But nice to see the respect here on that golden pocket, because when it comes to trading, guys, you don't need to snipe the bottom for all-time highs. Right? This is already a 6% move to the upside. I can already tell you, at least with my position sizes, right? Like, this is plenty of a move for me to either take the trade and ride it into a Fibonacci retracement from the previous high, which we are not quite at yet right now, but we are potentially headed there. Local fibs pushing into the golden pocket right now, 786, it's at 373. But there's plenty of room to make some money, right? We make our money on the volatility, right? It's a little up, little down, little up, right? You can make money on these moves. And all it takes is understanding where you have a high probability of a reaction. It doesn't need to be the bottom forever, right? This is not the bottom before new all-time highs. That does not matter in the context of a day trade or a scalp. All we need is the downs and the ups. We just need the volatility to make some money. And if you have a high probability level that you're going to get where you have a high probability of getting a reaction from, at least some kind of a high probability reaction, you can make some money on that. Take some profit. Move your stop loss to break even. If it runs, congratulations. You just entered a grand slam trade. And if it stops you out, you can just continue to make some money, right? So that is my little 2 cents here on that. I wouldn't say from a long-term perspective, I wouldn't say this is like a massive sign that you're going to get a massive move up, but it is an area to put a higher low for a potential higher high, which would push you into the golden pocket retracement here at about 392. But with the daily money flow, I would just still be ready. It's not just like every Fibonacci retracement. If you bounce here, it has to be the higher low, right? Because you're going to have to fight those Fibonacci retracements pulled from the high. And with the way money flow is coming out on the daily, would definitely be aware of a potential trend change here, right? Just based off the money flow. Let's see. Nice spa chill music. Yeah, I did download some new tracks here. Just low volume little beats here. But yeah. JP was just lame. Yeah, shout out to Mrs. Alfini. Definitely didn't get the fireworks that everybody would hope for. But it is exactly what we expected, right? Priced into 0.25 basis points. Or 25 basis points, and that is what we got, which is typically the expected outcome. So there we go. Shout out to Poita, says, Frankie, I work 12 to 14 hours every day. I don't have time to watch the charts all day, so I always miss my entry. What would you suggest? Shout out to Poita. Bro, just shuffle up those time frames, bro. In my opinion, right, I always talk about if you want to be a trader, right, there's many different types of traders that many different types of trading that you can do, right? You could be a scalper, a day trader, a swing trader, a position trader, an investor. You could be many different things, right? And I always recommend people pick something that works with their lifestyle, right? If you have a family, right, I have people in my personal life I tell this to. If you have a family and a full-time job and a career that you're trying to level up in, right, chances are you're not going to be positioned correctly to scalp the 5-minute time frame or the 15-minute time frame. But that does not mean that you cannot trade. But what I would say is just stick on the higher time frames. Look at the weekly, right? You're going to have to wait a lot longer to have your levels hit. But what it's going to do is it's going to give you a lot more you're not gonna have to watch the chart every 5 seconds, right? So like stick on the daily, the weekly time frame. Look for those massive key levels. For example, this trade that we have down here from 107K that we are still holding, right? When you look at this, right, we had massive support down there at $107,000. After the all-time high, it took quite a bit of time to get down there, but we knew this level was sitting down here. It took about 2 weeks to get down there. Right? And you could just set an alert on these levels. You don't care about making money on this move, 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 right? You only care about hitting your major key level of support from a higher time frame perspective, right? To give you a bigger drop rip to the upside. So what I would suggest is just have these levels marked off on your chart. You can enter the trade, and then once you enter the trade, guess what you're doing? You're chilling in this position. The first major level of resistance there was 115K. It then took you another 10 days to reach that level, right? So you can have your alerts set on TradingView to have your high time frame levels marked out, right? Set that alert. You'll get that alert, right? And then you have some time, right? Like even here, like you spent 2 days down here. You could have I have 2 days to potentially enter your position, look for your confirmations, take the trade, and then you could just set your stop loss, maybe set your take profit at 115K, which in my opinion was the next target. Maybe you have different targets, but then you just chill in your position. You might check it once a day. You just kind of check on it, be like, all right, we're still grinding up, right? Oh no, we're pulling back, but we're not at my entry yet, right? And you could just let that kind of play out over time. And you're not going to get 5 trades a week, 3 trades a week, or anything like that. I mean, you would be sitting in this. I mean, honestly, there's not much opportunity in here. Like I said, we've only taken a couple scalps in this chop for the most part. The last decent trade that we've had here was from the low, because that's really the only last decent trade trade opportunity that we've had. You got to take what the market gives you, but you would have plenty of time to sit in this position, right? You're not checking the 5-minute time frame. Like when you get these pullbacks like this on the 5-minute chart, right? You're gonna see that dump down and be like, oh my god, like I gotta watch these charts constantly, and it's like you're not worried about this on a high time frame swing position, right? I was not worried about this on my swing position, and neither would you, right? So you have time to kind of just like let the trade play out, and you don't have to check the charts every 5 minutes, and you're still making nice money, right? With a what was this percentage move, right? A nice little 9.5% move to the upside. You're still capitalizing on the moves, but you're just viewing the market from a higher time frame perspective. So you might not be catching a trade from here to here, and then 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 here to here. You're just catching maybe this trade, maybe just this trade, maybe just this trade, maybe just that trade. So you're taking fewer and far between. The trade setups are further and fewer between, but you don't have to monitor them every 5 seconds. So that's what I would request. That's what I would. That's what I would say. That's the advice I would give for anybody looking to get into trading and you don't have time to stare at the chart every 5 minutes. The problem is, a lot of people, for whatever reason they get into trading, they want to trade the 1 minute time frame. They want to click buy and sell. They want to get involved. This is a very dangerous mindset to enter trading with, especially when you're first starting off. Because you're going to be battling that fear and greed, right? You're going to be battling those emotions every 5 seconds rather than, you're just be like, oh my God, rip up. Oh my God, rip down, right? It's like, oh my God, rip up. Oh my God, rip down, right? Those emotions are going to be amplified on the lower time frames because the ups and downs happen a lot more because all those tiny little moves are kind of like exaggerated. So yeah, and it's not that you can't scalp the lower time frames, but as a beginner, I would say at least start off as on the 4-hour chart in the daily, right? Like get these bigger moves that aren't gonna elicit all these emotions instantly. Every 5 seconds, you're changing sentiment. So there you go. Shout out to Chowder. Shout out to D-Man said, love you, Frankie. Hopefully catch you on the live later. Yeah, shout out to you, brother. We'll see you in there. I want to trade the 3-second time frame. Shout out to Retro Mike Tech. Yeah, we pull up the 1-second chart sometimes. Oh my God, long it. Oh my God, short it. Oh my God, it's ripping. Oh my God, it's dumping. Oh my God, bull run. Oh my God, bear market. It's just crazy. And then you look back and you're just like, okay, this is on a higher time frame just going sideways. So you want to try to avoid those emotions at first as much as you possibly can. Let's see. What do we think about the XRP chart? I'll check on we checked the XRP chart in the beginning of the stream, but I'll jump into it real quick in a second. Are you going live again later? Yeah, shout out to Curtis J. Yes, we will be live at 5:45 p.m. Eastern Standard Time. This is just a little bit of an additional live stream for you guys. Taking a look at XRP. Wow, look at this, guys. Look at this. The evasive chart. I'm just kidding. Let's pull up an actual significant time frame here. Probably not too much to update here on XRP either, but we'll take a look at the lower time frames. Yeah, there's nothing to update here other than what I said in the beginning of the stream, right? Key levels of support here. Your biggest level here is going to be that 786 at 280. We lose 280. I'm probably looking down towards about 250 to 260 towards our bigger golden pocket retracement, right? You're inside your volume profile. So in my opinion, until you break this volume profile and lose this 786, there's no reason to really be worried about coming down to 250 or 260, at least, instantly. As long as you're in this range, right, you hold inside that volume profile, doorway to the POC is still open, flip that POC, you can look up towards that value area high. When we take a longer term look at it, right, like the daily money flows in the red. So high, low, lower high, lower low, lower high into our golden pocket. This is an area where we could have put in that lower high, so I would definitely be careful of that. And if you're going to put in that lower low based off your money flow coming out on the daily, and the 2-day here. 2-day, of course, chopping back into the green, but that red dot is incoming, so I would pay attention to the daily in this case. Daily money flow coming out makes you anticipate the continuation of that downtrend. High, low, lower high, lower high, potential lower low to take out these lows, and at that point, I'd probably be looking into the 250 to 260 zone. But to really get that to play out, right, obviously we've already gotten the rejection from our level that we were looking at, but until we break down out of this value area, we could just chop and eventually money flow shapes up and you continue through the profile. As long as you remain in this profile, I'd say there's nothing to worry about, but I would potentially be anticipating this to be a lower high and a lower low just based off money flow. But you can see money flow has not been giving the clearest signals recently, right? Typically, especially the 2-day, right? 2 days usually nice green wave, nice red wave, but here, it even got choppy back here a little bit, but it's just kind of chopping around here. Money flow has been very, very difficult to read recently. At least on the, lower-ish time frames, right? Like weekly, weekly still kind of just chilling in the green here. But, just like on Bitcoin, right? We look at Bitcoin and like the money flow has been super chopped up, like even on like significant time frames like the 16-hour, right? Like this money flow over here is like red, green, red, green, red, green. Now we're just back in the green. So it's really hard to call direction when you have chopped up money flow like this. And it's really just because the price action has been choppy. This will shape up again at some point. But yeah, that's what I would say for XRP. Keyest levels are going to be, major resistance, I would say, is going to be about 335 at the value area high. Major support, value area low, honorable mention at 291. But really the level you don't want to lose is 280. You lose 280 decisively, I'm looking for that bigger drop down. And the break of the low here at 269. So there you go. Cardano going up. Let's go. Let's take a look at Cardano. Yeah, it's crazy. This is how you know sentiment is, it is going up 100%. But it's like, let's take a look at the 4-hour. Yeah, you're just still within your profile. Even if this thing were to continue up, right? Even if I look at the local Fibonacci retracements, right? Like, until we break that 786, I'm not really going to get out of bed. Well, I guess I am out of bed currently, but, we could potentially push all, oh my God, it's ripping. Is this bullish, right? But if you don't understand that, and maybe you do, I'm not saying you don't, but I'm just saying if you don't understand, 8-hour money flow looks pretty good, 10-hour, 12-hour, 16-hour choppy. Yeah, just this daily money flow, right? There's room for chops up and down, right? This money flow was coming out, but we still got a pretty sizable rip of 20%, right? It doesn't mean you can't get the moves up, but you just got to be careful of the lower highs and lower lows, right? Or at least the rejections at your golden pocket 786. Right? So, even here, when you look at Cardano, it's like, all right, well, cool. You have money flow coming out. You're getting a push to the upside. So great. You get a nice 20% rip to the upside. That's plenty of room to make some money, obviously. But you have to have that overall context of like, this is major resistance. And with money flow coming out, the possibility of high, low, lower high, potential lower low incoming is in the cards. So you have to understand that you're probably going to want to take profit at those key levels of resistance where the lower high could come in at. Which would have been a very good decision because you wound up getting a pretty sizable rejection there. And because we are rejecting the high of the range here, you also have the volume profile pointing towards a potential rotation from the high. Money flow is coming into the red, continuing that downtrend. And based off the volume profiles, you're going to be anticipating the POC and potentially the value area low next anyway, right? So that's why I say, sure, you can get the bounce there, but until you break above this 786, even then you have the value area high above you. I'd still say you have a lot of work to do to say that you're not going to rotate this volume profile in full, which is why I would prefer to wait for this bigger level of support sitting down here. Sitting down here between 70 and 61 cents, right? Because sure, you could scalp this to the upside. You could scalp this to the downside. You could scalp it to the upside, right? But if you're not looking to take those lower time frame trades, which oftentimes I am, not on Cardano, but if you're not looking to do that, why not just wait for the higher time frame level to get hit for a much higher probability bounce and a much higher probability larger move to the upside? Doesn't mean you can't break out from here, right? But there's just no setup there in my opinion. Again, a little bit of a push to the upside. Not too shabby. But again, that daily money flow, guys, we got to watch this daily money flow on just about everything, right? If it's going to indicate more downside for Bitcoin, Ethereum, it's probably going to indicate downside for all the other altcoins as well. What the heck is Injective doing? Right? You rotated from the low to the high. You got the higher low on your golden pocket, the higher high. You're just chopping around here. I would say the biggest level to get above, and I'll just take this off and look at our last range. It's nice that you're holding above this local value area high, but you're still within this larger profile. So I would say this is really the level you want to get above and hold. And more importantly, if we just pull our macro 786, yeah, you still got work to do. Until you break above the 786 at 1561 for INJ, that would be your ticket to a much bigger move up. Until then, yeah, You got a lot of work to do, in my opinion. Got to get above the value area high. And then even this, right? It's like, yeah. What you could also do here is, do I have this range pulled? I do not. Do I? I don't. Do I? I don't. You can also look at this as like a local range. Yeah, I don't know, man. Especially with the daily money. I mean, even your 3-hour money flow, it's coming back into the green here, but it's generally trending out. Daily money flow coming out generally as well. I know you got the green dot potentially. It's just choppy money flow, man. Dang. This is like one of the easiest things to look at to identify trend, right? Like even this daily money flow, massive red wave, you cross into the green, you continue up. Or you kind of chop sideways, but you get the money flow crossover into the green, you continue your trend up, correction, you continue back up, you do break the highs. But here it's just super wonky. I would still say this is generally trending down, right? You have the high, lower high, potential, even if that green dot prints, potential lower high and continuation out. Super choppy looking, but let's take a look at the 16-hour coming back up. Yeah, man, money flow is just choppy, man. It's just choppy. Even on the lower time frames, it's choppy. But even here, right, this local profile has been pretty clean as well. There's your deviation above the high. Textbook, very similar to Solana. Textbook, higher highs on your price action, lower highs on your momentum waves, money flow coming out, acceptance back into the range, POC next. If you can't reclaim this POC, you might just play around here. This is the area where the most volume was transacted. You can chop around these areas, very likely, right? But, if you wind up getting stuck under that POC, value area low is next, sitting at about 1275. That's a more local outlook. But I would still pay attention to the higher time frames as well, all right? Macro value area high, massive level. It's all over. We're going to zero. Shout out to ICG, Inner Circle Gangster. Shout out to you, bro. ETH is pumping. Oh, wow. Push right up into the... Actually, let me pull it up on this range. Yeah. Nothing really that significant. Doesn't mean it can't continue. But again, it's like when you look at the, money flow here, it's very similar. And I try to show this example like every time we have it, right? It's like you break into the range, you come back in, right? Oh my God, ETH is pumping, right? But what is your money flow doing? Money flow is going to indicate the longer term trend. Money flow is coming out. That means that any bounce is more likely, even if it looks bullish, right, is going to be much more likely a lower high and a lower low. Break structure to the downside. And, especially when you have a volume profile, it's like you can't get out of the volume profile. POC is probably next. Value area low is next. So, like, this is never an area where I'd look for a long. I would only be looking for shorts here. And then when you get down to the value area low, that is where you want to look for longs. Undervalued price, right? Inside of this is the fair value. Above it is overvalued. Below it is undervalued. So you already know if you could find confirmations to take a long here, not only do you see the confirmations, right, but you could also say to yourself, I'm at least taking a long position at an undervalued price, right? So you're going to get, more than likely than not, you're going to get some kind of push to the upside into the value area low, POC, and then if you could stay in the range, you look to go to the high. You deviate above the high. This is, again, where you would look for shorts, overvalued price, and yes, this will break out at some point, probably, but, more often than not, and I don't want to say more often than not, but the obviously you're not going to range around forever. But if you have the signs here, massive bearish divergences here on the 3 and 4 hour, right? Well, hey, you could look to ride this back down to the value area high. And if your money flow is coming into the red or still in the red, say, or still coming out, right, which it was here, you could look for another continuation down, right? We're just kind of ranging around here. But I would say money, a lot of people ask me, how do I know whether a volume profile is going to break out or break up, right? Or break down or break out, right? Well, I would say money flow is a big thing to look at. Right? If you're chopping around sideways in a range and your money flow is leaving, right, the chances of this breaking down is going to be much more likely than it just scamming to the upside. And if it does go to the upside and break the 786 into new all-time highs, well, you're just going to get a fake out on the indicator, which is fine, right? That'll happen sometimes. It's just very hard to predict. But more often than not, I would say 7 out of 10 times probably, you'll see that money flow indicate the correction continuing in whatever way the money flow is going. So in this case, it's like you got to be aware of the lower highs and the lower lows. And then eventually, if that money flow continues out, right, you can look for the breakdown of the range. We do this on Bitcoin constantly, right? If you watch the live streams, you will know. One of the big reasons why we anticipated this range to break to the downside is, well, what do we have happening, right? Well, number one, we had our money flow on the daily, which was very very robust, I guess you could say. But, you did have a massive green wave, and it was just continuing to the downside, right? Expecting that drop down. We also had the 4-hour money flow, right? Just locally here from the drop down into the volume profile. It's like, well, hey, once my 4-hour money flow crosses into the red, what does this indicate, right? Sure, you can get bounces to the upside, but you're going to be looking for lower highs and lower lows. This would indicate that this range is much more likely to break down, and you're going to lose the range, rather than hold support and get a massive break into new all-time highs. Why? Well, money flow is indicating the trend is going to be down, right? It's one of the most powerful indicators you could possibly look at, in my opinion, right? It's not end-all, be-all. It's not the only thing you can look at, but it really does help you identify, like, why was I looking to hold my short position for a bigger drop down to this level? Well, I had money flow pointing in the right direction on almost every single time frame, even the 12-hour, right? 12-hour money flow crossover into the red was one of the big things we were looking at. This is a higher time frame. This indicates the trend will continue down. You can bounce, you can scalp this, but lower highs and lower lows are going to be more likely, which gave me the confidence to hold my short from the all-time high that we took in the premium Discord, gave me the confidence to hold that for much more profit, and it did wind up playing out. So there you go. So yeah, Bitcoin just chopping around here. Let's jump back into chat real quick. Let's see. Shout out to Art for Sat said, do you sell the money flow indicator? I do not sell the money flow indicator. It is a paid indicator. It's not my indicator, though. It is CryptoFace's indicator. Shout out to the GOAT. And I have been using, just so you know, we do have an affiliate link if you want to try to save some money on this indicator, but this is not why, a lot of people will be like, well, you're just trying to sell your indicators. It's not true at all. I've been using Market Cypher way before I ever had a YouTube channel, right? It's been a part of my trading for many years. And then I just wound up in a situation where, like, now I know CryptoFace and, we have an affiliate deal and all that stuff. But yeah, and just to be clear here, just to prove to you, right, that I'm not just going to shill a paid indicator, you do not need this to make money trading. It definitely helps, right? It's a huge part of my analysis. But if you're looking to get into trading, before you spend any money on, like, I would say Market Cypher is probably one of the good things to spend money on. I would definitely back that. And it could really, really help you understand the market before you understand all of the more advanced concepts like liquidity and all the key levels and all that stuff, volume profiles, order flow, all that stuff. It could really help you just simplify the market, right? Because if I just take everything off the chart here and I just look at money flow, right? Like take everything off the chart here except for money flow, you could see just in general, right? Nothing is going to be 100%, but you could just kind of see here, especially on higher time frames, right? And the weekly time frame is probably the best time frame to do this on. Right? If you look at the weekly, these weekly money flow crossovers, obviously a higher time frame is going to be much more significant. Weekly money flow crossover into the green. This means that a massive high time frame uptrend is probably going to start. Right? Once you get the weekly money flow crossing over into the red, that indicates much more downside, right? It's almost indicated every single bear market, right? Money flow crossover into the red, capitulation into the depths of the bear market. That's where you want to buy. Money flow crosses into the green, high time frame signal that the trend is going to continue. Same thing here. Weekly money flow crosses into the red, massive drop down. This is where you want to accumulate. Money flow finally crosses back into the green. Yes, you did have the C19 dump. Obviously, it's a black swan that nobody can predict. But obviously, it did wind up being a higher low for higher highs to come and a massive bull market to follow. Money flow crossover into the red. Massive bear market. People hated me when I talked about this. Money flow is an indicator. You can't listen to indicators. Well, it wasn't the only thing I was listening to. Massive bear market. This is where you want to accumulate. Once you cross back over into the green, well, guess what? Massive uptrend to come in, right? Doesn't mean you can't get little fake outs here and there. It doesn't mean that it's guaranteed to play out, right? But you could just see, from a simple perspective, it just gives you a good filter on whether you should be favoring longs. If money flow is crossed over into the green, you're going to have a much better time longing the lows and riding that trend rather than shorting every high looking for massive lows. And it works the same way on every other time frame, right? This is just an extreme example because these weekly money flows don't happen very often, right? Bear market, bull market, right? So yeah. But yeah, if you do want to save money, you could use our link. If not, if you don't want to support the channel, which is totally fine, you just go to marketcyphertrading.com. If you don't, whether you use our link or not, I would always suggest Market Cypher. I was pitching Market Cypher before I ever did any of this. So, but yeah, there you go. Let's see. Tony said, where can I buy the money flow thing? You can check the link in the description down below. We have a Market Cypher link. If you guys are looking for a place to trade, all the exchanges that I trade on are down there. You can check those out as well. Does it work on stocks as well? Absolutely. Absolutely, it does. All right, it'll work on the S&P. Now, obviously, it will move a little slower with slower moving stuff like the stock market, right? So Bitcoin's much more volatile, so you get a lot more crosses. But yeah, no, 100%. right? Like it'll pretty much work the same exact way, right? Well, where's your money flow crossover here on the S&P? On the 4-hour, this is just a random example, 4-hour money flow crossover, right? You're breaking down, money flows crossing into the red. What are you going to anticipate? Lower highs, lower lows. What happens? You continue the downtrend. Then your money flow crosses into the green. What do you get? Higher highs or higher lows and higher highs to continue the uptrend, right? So it's all the same thing. And before you look at this and you say, well, I'll just short every time the money flow crosses into the red, I wish it was that easy, but you still have to understand the context of the market, right? There's no, even as someone who has an affiliate deal with MarketCypher, or, as someone who is a trading influencer, right? There is no magic bullet, right? There is not one thing that you can ever look at, although this can really help you identify the trends in the market and all that good stuff, and really help you trade, find fire entries, all that. But there's just nothing, there's never going to be anything that you could just see a signal on the chart and then just like trade and make a ton of money. It's just simply not that easy. You have to understand market structure. You have to understand the macroeconomics. You have to understand how the charts move in general, right? But this is, definitely from a simple perspective. I think this is a lot easier for people to grasp. It's like, well, hey, I see money flow coming out. It's in the red. It makes sense for this to continue down. I think it's just like it clicks with people's brains very simply when they're starting off trading. But just don't get it twisted for like some kind of magic bullet where it's just like, I'll just click buy and sell and I'll make $1 trillion. If it was that easy, everybody would be a billionaire. And I would have never learned any other TA. But it definitely is, once you start pairing this, right, with things like volume profiles, right, and even on the S&P, it's like S&P goes above the high. This is overvalued where you would want to look for shorts. You're looking for the continuation to the POC and then eventually the value area low. And then if your money flow's crossing out, well, you're going to be anticipating lower highs and lower lows anyway. So you can take that short position, right? Maybe move your stop loss to break even and then just target lower prices. If it stops you out in profit. If not, which you would have the idea of being able to hold this trade for more profit because money flow is crossing out, right? But you still have to understand the volume profiles, how to enter the trade and everything. This just helps me with direction. So if I did short up here, and maybe I'll just use Bitcoin as an example because I actually took this trade with the premium. We took this short up at the all-time high. I think 121.7. My entry was actually right here. But the reason I was looking to hold this, the reason I didn't just close this at the value area low, because obviously shorts at the highs, this profile was not here, but just for argument's sake, right? You get above the highs, you're looking for shorts, right? You get below the lows, you're looking for longs. The reason I wouldn't be looking for massive longs here for new all-time highs is because of that money flow coming out. So what do? It gives me confidence to hold this short for lower prices, which we did. And then once we get down to the low, we found our bullish confirmations for the long position. We took that. And then on the way up, what's happening here? 4-hour money flow crosses into the green. Well, hey, guys, we could probably make a higher low and higher high and continue the uptrend. What happens? We do exactly that. And now the long is in massive profit. I've closed most of it. But we even talked about this on the live stream. We looked for this higher low. Why? Well, it was a golden pocket retracement, right, where you would likely put in a higher low and a higher high. But why would I even be interested in a higher low here and not expect a continuation of this dump? Well, it has to do with the money flow crossing into the green. This gives you the idea that you're better off longing the lows for a continuation up rather than just shorting the highs and expecting it to go to zero. The money flow is absolutely pinnacle in my analysis for that exact scenario. Bitcoin getting a nice little pop up here. I wouldn't say nice, but getting a little continuation up here. Let's pull that fib again. Yeah, just chopping around here. Get above that 786. We can look up towards that daily, that bigger Fibonacci retracement. Yeah, you get the golden pocket just above, and then that 786 daily is really going to be key. Because once you get above that, that's where I'd expect the value area, the point of control, the range to come in. So we'll see if we can pop above this stuff. Get above here, looking up into that POC. Daily MPOC, point of control, golden pocket, sitting between, I would say, about 117.5 to 118.5. So we'll see what happens here. Let's see. Ain't Jack pumping. Same worthless price action of the past 9 months. Yeah, shout out to DK Insight, man. It is brutal out there, bro. Not gonna lie, it is absolutely brutal. I from a content creation perspective here, guys, it is getting very rough on these live streams. It's like every time I come up, I have to understand I have new viewers. People come in every day, right? But at the end of the day, it's like, I might start just doing like slightly shorter live streams just because like I don't want to like oversaturate the same information, right? Like my longer term sentiment here, like still pretty much remains exactly the same. Obviously we could take the Fed information into account now, but at the end of the day, like the biggest level is up here in my opinion, and then underneath us, 113 to 112K. I'm like, I'm just still waiting for those bigger zones. So yeah, I mean, I was already talking to Tony. I'm about to just like hop on the 1 minute and just gamble on the live stream with you guys just for entertainment. But I don't want to practice against what I preach, right? We're not here to gamble, but it's like, I mean, I've been trying to think of some new ideas here to do something a little better than just talk about the same stuff every single day. It's absolutely brutal. Absolutely brutal. People aren't bullish enough on BTC. Yeah, shout out to Keith. Yeah, I mean, listen, I would say, I said this the other day on my live stream. I would never advise, right? Not that I could advise. I'm not a financial advisor. I'm just some idiot screaming on YouTube. But, this is no, even if you buy Bitcoin up here, right? It's like you're buying Bitcoin pretty much as the most expensive it's ever been, right? Is this a good entry for a long-term bag? I wouldn't say. That doesn't mean that Bitcoin, people aren't bullish enough on Bitcoin. But it is, I do think if we do break into all-time highs, guys, I am not looking for $500,000, right? I am looking for a final wave to come in here and eventually end everything, which is going to be nice, right? It'll be very exciting when it happens. All the retail will come back in, hopefully. Alt season will be explosive. It'll be super fun. It'll be amazing. It's what everybody waits for. But it is really just a absolute nail-biter here. Again, total 2, right? Look at total 2. Total 2 tapping up against the all-time high. What is this thing doing? All right, it's pushing back up. I mean, can we get the breakout? It's kind of a nail biter, right? Because it's like this is the area that you want to break out, right? This is literally the all-time high, right? That's what you want. But it's also massive resistance. And to be quite honest here, if I take a look at Market Cipher in this perspective, I mean, we do have bearish divergences forming here as well, right? It's like high time frame, higher highs, high time frame, lower highs, right? There's your bearish divergence. Money flow attempting to come out on the 2-day. Daily money flow coming out as well. I mean, these are potential warning shots for more downside. I wouldn't say it instantly triggers a bear market, but if you want this breakout, I mean, man, Powell is really stepping on us here. So, but it doesn't take much to get up here and have the crowd come back in and, see an alt season come in, right? So we'll see. Maybe we just have some more effery until we finally get that to happen. BTC dominance breakdown. Yeah, I mean, this thing's been breaking down for quite some time. But yeah, yeah. I mean, this is the environment. This is what you would want. I mean, I would have liked Powell to be a little bit more dovish. But again, he was just like, rate cuts and money. Rate cuts and money. Numbers up, numbers down. 7, 8, 4, 16. Balance sheet down. Little bit. Not bad, good. Up, down. Bullish. Bearish. I don't know. Weird data. Numbers. Information. That's basically what he says. It's like, it's out of control. But I would say here from a chart perspective on dominance, it's like you had the rate cuts coming down the line. Now they're here. I would have really liked them to be a little bit more dovish than that. That would have been much more bullish. But, I mean, dominance breaking down. Total 2 at the all-time highs. Let's check the RTY. Did the RTY get any significant action here today? Ooh, man. The wick, dude. The wick. Come on. Come on, that wick, bro. Come on. Are you kidding me? Look at this wick. I mean, look at that, man. I gotta get out of here. I'm telling you right now, if this gets out of here, total 2 gets out of there. Bitcoin's probably popping as well, but more importantly, the altcoins. This is a big thing, right? You got RTY up against the highs. You got total 2 against the highs. You got dominance breaking down, and not only just breaking down, but money flow indicating a much more bearish trend to come in. I cover this every day. And for anybody who's new here, I know we're live at a different time right now, so there might be some new people. Number 1, hit the like button, subscribe to the channel so you don't miss this. But this is the same thing that we saw. This is very, very similar. We got down to the value area low. We had the daily money flow, the 2-day money flow, right? Here's the 2-day. 2-day money flow crosses into the red. 3-day money flow crosses into the red. Daily money flow crosses over into the red somewhere back here. You get turbulence, but eventually you break down and you get that big dump on dominance. Like, we're in that environment. Doesn't mean it has to play out, right? Especially if Powell doesn't shape up. But, from a chart perspective, it does look like there's a lot of things to be positive about. Now, I'm never going to tell you, hold on to your bags till 0, right? But, I mean, at this point, it's not like Bitcoin's breaking below 107K or anything. We're just kind of stuck up here in this garbage sentiment. So, yeah. Let's see. Russell and alts love rate cuts. Memes follow RTY. Yeah, absolutely. The RTY is essentially the alt sector of the stock market, right? It's like the lower cap stocks. So it's kind of like looking at like total 2 or total 3 or others on crypto. Yo, even Trump was pissed, posted a tweet. Shout out to DK Insight. Let's just hope that he doesn't come out with some kind of crazy bearish tweet to like hurt the economy even more to force the rate cuts. But I'll be honest, guys, you have to think about this, politics aside, right? Like for Trump, for him personally, right? Like he has every reason to want this market to go up under his leadership, right? So that's why he's so mad, right? Like he wants the stock market to do well under him, and he's a smart businessman. Again, politics aside, right? He's like obviously a businessman, and I mean, if he's gonna fight for it, I personally think not, and I'm not just to say he's fighting for us, right? I'm saying like even for himself, for his, if you're against Trump or for Trump, it doesn't matter to me. I don't really care, but if you think he's like a selfish businessman, like greedy billionaire, but like, great. I mean, it's going to be good for him anyway, right? So like he's fighting for himself too, which just kind of, we get the ricochet effect of that. So that's just my 2 cents. He's late. Yeah, shout out to Newark Guardian. Let's see. Shout out to Edgar, said, Value Area, Golden Pocket, and PLC, are those paid indicators or is this part of a TradingView platform subscription? Shout out to Edgar. The Fibonacci's retracements are free, meaning the Golden Pocket. Value areas are free. Fixed range volume profiles. These are just tools in TradingView that you can use. Those are, most of the stuff I use is free, right? Like fixed range volume profiles, Fibonacci retracements, daily MPOCs, weekly MPOCs, like all that stuff is free. So yeah. Do you see the news about Sol options about to go live just under the BTC price? Shout out to Keith. Anytime I get asked this question, and I actually did do this earlier today, I finally, guys, got those news events that I talked about. People always say, like, what do you think about this news event? Who said that? Shout out to Keith. So, yeah, my thought process on any kind of news is that it's less important than I think people realize, right? Or at least for me. It's not something that I pay a ton of attention to. And the reason for that, if I could find the chart, where is my cycle chart? Here's the thing, right? So these are major news events that have happened at pretty much at or before, right shortly before all-time highs. So back in 2017, we had the CME BTC futures announcement, right? And that was fuel, right? Talk about buy the rumor, sell the news, right? That rumor triggered, we had a pretty big sell-off right before, right? But you get that rally into the highs. And then literally CME futures launch. What is this? Pull up the daily chart, right? Literally, those futures launch. $10 days before the all-time high comes in, right? So a lot of people will be like, you don't get it. CME futures launched, like, this is the most bullish ever. Like, this is recognition by the powers that be. Oh, my God, right? We're going to $1 million. That massive bull event, right, was pretty much the signal that the top was in, right? You buy the rumor, you sell the news. Coming on over to the 2019 Fakeout bull market, right? We had the, this was Facebook unveiling the Libra stable coin, or the, I think it's how you say it, Libra. You get the news, right? And then shortly after that, the top is in, and you get the massive dump. And then, this wouldn't be as significant if we didn't get the C19 dump. But then we come into 2021. First top, guys, Coinbase IPO comes in, right? And I consider this the top of that actual bull market, although we made a numerical all-time high here. Guys, Coinbase IPO. Literally 6 days before the high, before a massive 50% drop, 55% drop. Oh my God, Coinbase IPO, this is huge for adoption. This is, oh my God. And I'm not saying it's not, right? But I'm just saying that typically happens, these things typically happen closer to a top than they do at a bottom, right? Or right before a massive rip up. And then when you look back, you're like, well, hey, kind of makes sense, right? It's like you're already up massively here, and then the bullish news comes out. It's like it's not going to go up forever. And then the same thing when the actual top came in. You had the El Salvador news, literally on that day, started a massive drop to the downside, massive bullish news, right? Again, 25% drop right after that. And then we got another rip up. What happens? You have the ProShares Futures ETF launch, literally comes in 20 days before the actual all-time high, right? Yeah. So it's like these news events, right, are not, be careful of this. I don't know what the news event is going to be if we go into a new all-time high, right? But if you get up here and you start pushing into new all-time highs, and you start seeing, oh my God, we're at 135K, and we're at that point in the cycle where it's very likely for the top to potentially come in historically, and then it's like, oh, we got another bullish news event, right? Like, you're probably pretty close to the top. Right? I don't know what that line is going to say at this point, right? But I'm sure we'll be able to get something up there. So, what is that going to do? It's going to get everybody excited at the highs, and they're going to wreck them, right? Like they have almost every single time. Whoops. So I've talked about this many a times, right? So it's like, the news events for me personally, like, I don't really pay much attention to the news. I am almost a 100% technical trader. And it's served me very, very well in the past. So until it stops working, I'm going to keep going with that. It's just like you get caught up in the news. It's like, it's very, I'm not going to lie, right? Like it definitely feels bullish, right? It's like, oh my God, like we have a futures ETF. This is crazy, right? Like, oh my God, I never thought I'd see the day. And back here, it was like Bitcoin was still a scam back then. It's like, oh my God, this is like such a legitimizing news event. But it doesn't mean that it's just going to go up from there, right? More often than not, you'll see a top come in there. This is like a perfect pinpoint, right? It's like Coinbase IPO, everybody gets super bullish. Oh my God, it's pumping, FOMO in. Wreck them. So something to think about, right? I'm not saying it has to happen like that all the time, but just like look at the past. So yeah, and I'm sure we could probably mark out these news events as well. So yeah. It doesn't mean it's not bullish long term. I mean, look at the Bitcoin ETF, the spot ETFs, right? Like we run up, right? They happen. Massive pullback. Sure, it was long-term bullish, right? And this was also, very unlikely that this was going to be the all-time high for the cycle, right? So there was much more room to run here, which was the bias there, right? But even then, it's like you launch and you instantly dump. I think it was like 20% here. Yeah, 20. That's sad that I know that. 21% instantly from that announcement, right? So it's like, the news events are just like, I mean, here you go. Bullish news event. What happened after? Dump, right? But when you're at these all-time highs, you got to be really careful of situations like this, right? And situations like this, and situations like this, and situations like this. So yeah, those all-time highs come in, and those bullish news events come in. Just understand, doesn't mean it's not bullish for Bitcoin long-term, but it could just be a thing to get the retail in to slam it on them. So there you go, guys. That's what I would say there. Frankie, do we expect Fartcoin to follow BTC downwards? I would say probably everything will follow BTC downwards, unless you just get like alt season to come in as Bitcoin dumps. Fartcoin, most things are just going to follow, more specifically Ethereum. But yeah, it's why I always say when you get into trading, right, a lot of people will say, like, oh, I'm trading all the altcoins. I want the bigger moves, right? I want the bigger percentage gains. But at the end of the day, you can find a bullish setup on an altcoin, especially like a meme coin, and then Bitcoin looks bearish, and you're not paying attention to Bitcoin. Bitcoin dumps. Everything else is probably going to follow anyway. So yeah, I would say it's probably just going to follow the rest of the market. Shout out to Keith said, but you're saying that, but we still have gone from 63K to 115K because of all this adoption. Yeah, shout out to Keith, absolutely. Long term, yes, right? Like you could say, this was super bullish, right? Like, does this help the adoption of Bitcoin? Does this help the adoption of Bitcoin? Yes. Does it mean that, maybe long-term you continue up to much higher prices? Yes. But it does not mean that that is the place to buy, right? More often than not is the place to probably take profits. So it's not that none of that stuff is bullish for Bitcoin. It's not that I don't see it as a bullish signal or not like a bullish thing, right? But it's just not typically where you want it. Like if you were longing on the news or shorting on the news, right, you're probably too late. So yeah, and like even here, right, you could say, well, sure, you got the sell the news event, but then we continued up, absolutely. But we were in a different part of the market there. We were not at all-time highs, right? We were expecting a new bull market to come in here, which we've gotten. So definitely bullish, right? The spot ETFs are very, very bullish for Bitcoin. But if that was coming in, right? I mean, just look at this, right? Like the futures, where is it? The futures ETF launch, right? If it's happening at the, where you're expecting the top to be, right, from a halving perspective, which this was, right? You also have massive bearish divergences. The charts were looking very bearish. When it happens at a place like this, sure, that's bullish for Bitcoin, maybe, but doesn't mean that that's the place to buy, and more often than not is the place to sell. Now, I would never just say, oh, bullish news event, sell, right? But you have to look at all this stuff together. So, yeah, sure, the ETFs can give you the continuation up, but again, this is not where you would expect the all-time high to be, right? It's not an all-time high. And it also doesn't have to be bear market tops either, right? Like when you look back at this one, this was not the bear market top, but it was a pretty significant drop to the downside. Even this one, right? Even the ETF, right? This wasn't a bear market, right? But it was a pretty decent drop of 20%. So yeah, it's like all that stuff is bullish, right? You can't argue that. But it's just like, it's just funny, right? You come up there. I mean, there's the proof. And I would say we're much closer to a situation like this than this, right? I would not expect. This bull market has been playing out for quite some time. A lot of people are going to get in here and think the bull market is just starting. Hopefully it is, right? Like, hopefully this was nothing, and we're just going to see a massive move to 500K. That is not what I'm anticipating. But, you know, we are already at that point in the cycle where we are looking for things to wrap up here. So, you know, we get up here and we're at 130K, things look bearish on the charts, and we get some kind of massive bullish news event. Doesn't mean you can't push you up a little higher, but it is more often than not much closer to the top than not. So just something to pay attention to, because those news events will come out. I can't predict what they're going to be, you know, but definitely something to pay attention to. If you're trading based off the news, it is you're typically too late, depending on your situation, right? And the situation in the market, right? You could say, oh, I just bought Bitcoin because they approved the ETFs. That's fine, right? You would have bought the top here for a little pullback, but you would have eventually gotten a very nice move up. But that would only be good for like a position trader. I want to get into Bitcoin. I know the halving is coming. I know that's typically bullish as well, right? This was before the halving. So it's like, you know, for a position trader, it's like, all right, well, I was too scared to buy down here, which is fine, right? Maybe this would have gone lower. You would have been happy not buying down there, right? I personally was buying down here. But, you know, then you finally get the ETF news, and it's like, all right, well, cool. Now I feel a little more comfortable getting in. Also understanding the halving is coming. You're not at all-time highs. There's a lot more room to run. You know, then that's okay. But if you're looking for day trades, right, to like explode off the news, right, you're going to get popped every time. Almost, I would say, right? So, yeah. Let's see. Oh, my God. It is 4:30 in the afternoon right now, guys. Good Lord. I went a little too long here. How long have we been live for? We've been live for almost 3 hours here. Powell said they are still shrinking the balance sheet. These rate cuts are an excuse for the market maker to trick retail long and exit, so exit on the pump for real. Yeah, shout out to ICG. Yeah, that is shrinking the balance sheet is not great. So, yeah, like if he got up there and he was like, we're adding to our balance sheet, we're ready to, you know, we're ready to add, you know, that would have been a much more dovish tone, which would have been much more bullish. So, yeah, shout out to Tony D said, nah, this is a short stream, bro. Shout out to Tony D. Let's see. Shout out to Titanic says, bro, I'm holding ETH for 3 years now. Is this the time to take profit, or can ETH go to 6K? Thanks, bro. Shout out to Titanic. Well, at the end of the day, I don't have a crystal ball. I swear. Don't investigate it. Don't look into it. But I don't have a crystal ball. Just take my word. But, I mean, from a chart perspective here, I definitely don't think it's impossible to get a correction back down. Weekly money flow is still in the green. 6-day money flow is still in the green. Also, I don't really have a lot of Titanic. Shout out to you, man. I don't really have a ton of information, right? Are you long from here? I mean, if you're long from here, right, like 271%. I mean, if you're up 271%, right, you got to pay yourself. If you don't pay yourself, you're not gonna make any money. But you know, if you bought right here, right, you know, it's a little bit more of a risky situation. So it's kind of hard to say. I do personally think that even if we get a bigger correction on Ethereum and we do something like that, it's still not impossible based off high time frame money flow. Remember, money flow being in the green indicates that you can look for high time frame, higher lows and higher highs. I don't think that's the worst thing in the world. Once you break back down into this volume profile, well, then things get a little bit more sketchy. So yeah, I can't really tell you where to buy or sell. I'm not a financial advisor. I also don't know where you're holding from. If you're holding from down here, that's different. It's one thing. If you're holding from here, that's a different thing. If you're holding from here, it's a different thing. If you bought the top, that's a totally different thing. So, you know, I also don't know the journey, right? Did you buy up here, ride it all the way down, and now you're back in profit? You know, I don't know that specific situation. No one's ever going to be able to tell you when to buy or sell. I personally think as long as this money flow in the high time frame stays in the green, I think there's a decent chance that you could continue up towards 100, up towards our next major targets, which in my opinion are going to be sitting between about $58,000 and $6,000, $5,800 and $6,000. There's the $5,800 Fibonacci extension. There's the $6,500 Fibonacci extension, right? So like I'd be looking to potentially push up into these levels, break 5K. But at the end of the day, bro, nobody can tell you what to do, Titanic. I can give you my TA and tell you what I think. But at the end of the day, you know, the top could be in at 5K, right? Even if I don't think that, right? It's not impossible, right? And I don't know your specific situation. I don't know if you're willing to, you know, how long you're willing to hold. I don't know if you're overexposed. So, you know, a lot of those things come into that, right? So no one's going to be able to tell you when to buy or sell. But, you know, I think as long as you can remain above these highs here, this value area high, I think, and, you know, even the 786 at $4,000, if we could stay above those levels, I think you could push into here if we see the alt season come in. But if that doesn't happen, right, I don't want to tell you not to sell here because, who knows, right? Maybe this thing does go into a bear market. We see something we've never seen. All the charts are wrong. Anything can happen. Nobody knows where this thing is going 100%. It's impossible, right? And if someone is telling you that, they're just lying to your face. So yeah, that's my 2 cents, right? I think you could bounce here and continue up even if you get the bigger correction, but don't make any decisions based off what I say, right? I know we're right way more than we're wrong here, but just understand, your financial responsibility is up to you. Your decisions that you make are up to you because everyone's in a different situation, right? Some people might buy Ethereum down here and be like, I don't even care. I'm going to hold this for 10 years. I don't care if it goes back down, right? So you have to ask yourself a question. What is your plan here for crypto? If you bought in here and you're looking to make X amount of money to buy a house, X amount of money to pay off debt, X amount of money to buy a car, something like that, whatever it is, you have to have a plan for that. You have to have targets. Where are you looking for price to go? If we go into all-time highs, I'm saying this is my target, my first target. So, yeah, take that for what it's worth. I wish I could give you a yes or no, buy or sell. But for me personally, I have not taken profits on my Ethereum. Maybe I should. But for me personally, my bias is, unless something changes, which my bias will change if there's a reason. But my ETH is bought from much lower. So, this, even if we pull back here, it's not a big deal for me. So I have not sold any of my ETH. That's pretty much all I can say. Shout out to Tectonic. Shout out to you. Hopefully you bought low, bro. Hopefully you're up nicely. If you're up nicely, one thing I could say is, nobody ever lost money taking profits. Let's see. Shout out to Dave said, wait, what? Short stream. How did I miss this? Shout out to Dave. When BTC. Let's go. Shout out to Dave Digital in the chat. And Dave, I don't want to make it seem like we're skirting out on your presence here. But we are going to be live here in a few more minutes, guys, at 5:45 p.m. Eastern Standard Time. So I'm going to go ahead and try to shove some food in my mouth before we go live at 5:45. But thank you all for tuning in. I appreciate every single one of you guys for hanging out with us here and watching Grandpa Powell talk. But yeah, that's all we got for today's live stream. Thank you for tuning in. We'll see you in a little while at 5:45 p.m. Eastern Standard Time. Hasta pasta. Frank Candles out. No fake out. Bing bong.